This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo on assignment. John Tucker with us today, which is a good thing. Great knowledge dazzling knowledge yesterday from John Tucker on New Jersey ports.
And the bridges and all that stuff is fantastic. Yeah, exactly.
And I guess it's more than serious, to say the least. Day two of a strike here across the eastern seaboard, and terrific news flow yesterday. Just an open question to get started, Paul. What captured your attention yesterday?
Well, I mean, I think the tensions in the Middle East kind of are ratcheting up here, bringing the shelling of Israel and the rockets attack from Iran certainly takes it up a notch. And again, we're going to talk to some really informed, smart folks this morning, Tom, to give us some perspective on how those things are developing in the Mideast. Piecing
that together now with very busy people. Aaron David Miller will join us in the 8 o'clock hour. Julie Norman with us yesterday, just brilliant, from UCL London. Not available today, but we'll get her on here in the coming hours and days. The story continues to unfold. Our coverage led by Ethan Bronner in Tel Aviv. Futures negative 10, Dow futures negative 123. I believe we're going to go to Dubai here. But first, from Interactive Broker Studios, a Bloomberg Business Flash, John Tucker.
All right, let's start with oil then, with the possibility maybe strikes on Iran's oil infrastructure under consideration, possibly. Crude oil continues to push higher. You have the Brent up close to 3%, 75.74 a barrel. NYMEX, West Texas, up 3.25%, 72.09 a barrel. ExxonMobil pre-market up 1.8%. Then you have the oil services company Halliburton up close to 2% pre-market. Schlumberger also, that was up 2.6%. A risk-off sentiment, Tom, as you mentioned, it's there in the equity markets with futures lower. Investors also keenly focused on the jobs. The monthly jobs report due Friday from the Labor Department. Humana, what a drop there, seeing members enrolled in their plans dropping sharply. Those shares, pre-market Humana, 15% lower. And Nike shares, after their results, they're down over 5% pre-market, withdrawing the full-year sales guidance. They're citing that leadership transition that takes place. That's going to be later this month. Chinese shares listed in Hong Kong jumping the most in almost 2 years. Mainland Chinese markets remain shut for the week-long holiday. And Japanese yen, let me mention that real quickly. It is weakening. The incoming Prime Minister, Ishiba, says his country is not in an environment to raise rates again. And right now, the Dow futures 118 points lower. S&P E-mini futures down 10. The NASDAQ futures 21 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. A debate last night, Paul. Amy Walter at Cook Political Report on an October 2 summary of swing state polling. And we had an academic in here, good morning, from Harvard and Young, like 10 days ago. And he said 3%'s undecided. And I basically didn't believe him.
Yeah.
I said, wow. Yep. And I'm like, yeah. Amy Walter, this is from the Cook Political Report. There's also been a marked drop in the number of swing state voters who are undecided or planning to vote third party, from 10% in August to 5% now. Think of the millions of dollars being spent on 42 people in Pennsylvania.
Exactly right. I mean, what changes, what swings this thing? It's you've just seen both sides, so entrenched here. I don't know how you identify those people, much less try to send your message to those people.
Yeah, I'm trying to get Greg Giroux on with his great granularity.
He knows who those 42 people are.
Yeah, the great granularity at Bloomberg Government. Amy Walter, Jessica Taylor writing that up at the Cook Political Report. Okay. I'll get that out on Twitter here this morning. Joining us now from Dubai on the last 24 hours, Jumana Bertzacci, of course, working Horizons out of Dubai. Jumana, what is different about this Wednesday afternoon in Dubai versus 48 hours ago?
Well, there's certainly a lot more edge than it was 24 hours ago, 48 hours ago. The events of the last 24 hours mark another significant escalation. And we've been talking for a while, the last couple of weeks, about the intensification of the conflict in the region. Ever since the assassination of Ismail Haniyeh, the Hamas leader in Tehran, Iran had been warning that a retaliation was forthcoming. And that only amplified after the killing of Hassan Nasrallah on Friday alongside one of those senior IRGC commanders. And so what we got last night was Iran demonstrating that it was acting a reprisal for the killing of its very senior figureheads within the axis of resistance. And if you just look at what happened yesterday, seeing the sheer number of ballistic missiles that were fired at Israel, unprecedented. Also, just comparing what happened yesterday to what happened in April, which is the first direct tit for tat escalation that you saw between them. These missiles were a lot more potent, and yes, they were intercepted. But the big question now for everybody is how Israel is going to respond to this.
Jumana, you've lived this, and I'm going to mention this, folks, with Aaron David Miller here in about 60 minutes. If you go west of Jerusalem towards the Mediterranean, almost to the Mediterranean, and again, these distances in Israel are so small, 30 miles, maybe 30 miles, you're almost to the Mediterranean, or south of Tel Aviv, maybe 15 miles, there's Gadara. It's a small little town, 30,000 people, and they had a school taken out last night by a missile. How would you suggest, Jumana, the security forces and the government of Israel viscerally react to a school taken out in Gadara, Israel?
That is a question that you could pose for any single one of the targets in the region, in any single one of the countries that have been involved in the conflict. And what you see here is almost a visceral response. I think you used the word visceral response here. Once you feel like a violation of your sovereignty or your space or your security has taken place. And in this situation, there are many within the Israeli cabinet who would like to see a more forceful response out of Israel this time around. If you remember, back in April, the U.S. applied a lot of diplomatic pressure to keep Israel restrained. And what they ended up doing was taking out an air defense target very close to their nuclear sites, but left it at there in April. And that was the end of that particular round of tit for tat. This time around, many within the Israeli cabinet are saying we need to go more forceful to make sure that something like this doesn't ever happen again. And the way you do that is by continuing perhaps with assassinations or potentially targeting their energy infrastructure, because Iran is still pumping 3.5 million odd barrels a day. And then the more extreme option that people are talking about now is actually aiming for those nuclear sites. So, those are the options on the table right now. But certainly Israel have indicated that there will be a response.
And Jumana, I think as we think back over the last year here, the Israeli war aims have gone from neutralizing Hamas, getting its hostages back, to something apparently much, much broader now that they begin to engage Iran. Are those nuclear sites, are they realistically on the table? Because it seems like there's no limits to where Israel wants to go here.
There's certainly hawks within the war cabinet who would like for Israel to go there, but that obviously raises the escalation, the conflict, to a completely whole new level that the world has not witnessed before. And you've got to think that the diplomats, the U.S., will actually look to exercise their leverage on Israel's decision-making here to make sure that it doesn't get dragged in, the whole region doesn't get dragged into not just the conflict, but actually what could become a nuclear conflict as well. Because there are wars being waged on several fronts here. It's not just with Iran, but of course, now you have the incursion in Lebanon, and you've had this direct attack from the Houthis into Israel, and Israel vice versa into Yemen too. So there are several wars going on at the same time.
Jumana, bring it down to Dubai in one final question, if you can. The United Arab Emirates, with 5 tribes, if you will, going back hundreds of years, it's 85% Sunni, 15% Shia, with a focus of Shia in Dubai and Sharjah. I mean, to take a United Arab Emirates, how do they, with the fractious Islam of their crucial state, How do they adapt to what we're seeing right now? What does UAE and Abu Dhabi and Dubai do?
Yeah. Okay. So important to note here, the UAE signed the Abraham Accords with Israel back in 2020, right? So it's one of the few countries in the region that actually has a normalization deal in place with Israel. There were active flights before October 7 between the two countries. There are lots of economic ties, trade ties. And so from a political perspective, UAE and the conversations that I've had with some of the officials here, they say that it is important to keep the diplomatic channels of communication open because that's how you apply leverage. The second you cut off or the second you stop speaking, that's when the channels get broken, and that's when the real potential for escalation arises. So they see themselves as somewhat of a mediator, but equally, because they have this normalization deal with Israel, they can't press too hard. But what UAE has been doing, though, is they've been stepping up a lot with their humanitarian efforts. So the other day, they announced they were sending $100 million to Lebanon to help with the displaced people. They've been doing a lot of that in Gaza as well. You would think that after the war, and who knows when that's going to happen, they would be involved in reconstruction efforts as well. But they are neutral.
Leading our coverage in the Middle East, Jumana Brzezinski, Horizons out of Dubai. Let's get right to it with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, John. The vice presidential nominees used their time on the debate stage to focus the bulk of their attacks not on one another, but on those at the top of their rival tickets. Republican J.D. Vance and Democrat Tim Walz both sought to project themselves as genial opponents as they lobbed criticism at Kamala Harris and Donald Trump, respectively. Abortion became a hot topic. Vance addressed their fight over abortion on the CBS News debate.
I never supported a national ban. I did when I was running for Senate in 2022 talk about setting some minimum national standard.
Walz talked about the controversial abortion restrictions.
There's a young woman named Amber Thurman. She happened to be in Georgia, a restrictive state. Because of that, she had to travel a long distance to North Carolina to try and get her care. Amber Thurman died in that journey back and forth.
Meanwhile, former President Trump reiterated last night that he is not doing another debate against Vice President Harris. Israel is vowing to retaliate after Iran fired about 200 ballistic missiles at the country. Israel says most were intercepted, but one person was reportedly killed in the West Bank. Israel's Prime Minister Benjamin Netanyahu says they will fight back.
Iran made a major mistake and it will pay for it. The regime in Iran just doesn't understand our determination to defend ourselves and our determination to retaliate to our enemies.
Benjamin Netanyahu speaking through an interpreter. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Best day of baseball. I mean, and pulling in the Mets from the first Mets-Braves game 2 days ago. The last 48 hours of baseball.
Fantastic.
It's been great.
Fantastic. And it's the wild card. I mean, I know a lot of people debate the value of the wild card, but boy, we were playing meaningful baseball right down to the last day. And then the first four wild card games were fun. We do it again today.
Yeah. I mean, for our international audience, it's best 2 out of 3, and all these teams, if they win again, they go on to the next thing to play the dreaded Yankees. But, I mean, you were medicated, Michael, I know, but did you have to have a hospital admission last night?
Oh, when they loaded the bases in the bottom of the ninth, and I'm like, oh, snot. This can't happen.
Then there it was. We're having a lot of fun with this, folks. Baseball, the best time in America. From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around the clock. Equity indices, they are lower right now. Dow futures 172 points lower. That is down 0.4%. S&P E-mini futures, they're down 13 points, a decline of 0.2%. The NASDAQ futures right now 22 points lower. That is down 0.1%. So more risk-off sentiment. Humana shares, they're the standout this morning. They are plunging down as much as 15% pre-market. They say the proportion of its membership enrolled in 4-star plans and above will plunge. This relates to Medicare based on the Medicare Advantage Star ratings data. Nike shares also taking a hit. They were down as much as 5%. Sportswear company withdrawing its full-year sales guidance Tuesday and deciding the leadership transition that takes place later this month. The sales in the first quarter missing expectations also. The Mideast news boosting the price of crude oil this morning. Brent, the international benchmark, up 3.2%, $75.90 a barrel. Worth noting that Bloomberg columnist Javier Blas says OPEC's plan to boost production effectively signals it's abandoning the quest for triple-digit prices. And now he writes the reference value that actually matters is $50.
Saw that.
$50. Mike McGlone has been calling $40 oil for a while.
So, like I say, we're above 75 right now on Brent, above 72 on NYMEX. So
we're speaking to Javier Blas's people. He's in Spain looking at an olive grove. He's trying to buy an olive farm in Spain.
Which probably is far more expensive than crude oil.
Well, when you're having, the movie rights from his book alone are just spectacular. And, it's been an incredible busy day. Our team has been working nonstop, and we'll get Mr. Blas in here, but a shout out this morning to Ed Morse, the acclaimed PhD in hydrocarbons, if you will, ex-Citigroup, who really was the one who directionally called for lower prices. As you well know, folks, good morning out on YouTube. I'll get to live chat in a moment. Good morning across this nation and your commute. You know how much I hate the Fed parlor game, except, Paul, this time is different. You got to look at the parlor game. Stephanie Roth, with a brilliant note at Wolfe Research, really frames it out, the many different opinions. Stephanie, critically, you say the 3-month trend is not 116,000 is published, but is a higher statistic. Why is that? Many disagree with you.
Totally fair. So when you look at the 3-month average as it's been reported, sure, that it's 116,000. But what we've seen historically is that August tends to get revised up. So by actually up to 49,000 by the third print. So if you incorporate those types of revisions, which we expect to see on Friday, and of course we'll see whether that's right or not. But if we get a 49,000 upward revision to the month of August, then your 3-month trend is closer to 135.
And what's amazing about this, folks, 1 over the square root of n, is you got Bucknell mathematics here, along with masters in statistics from Columbia University. Like the other day, we're talking to Sebastian Page about Gaussian and Poisson distribution. Stephanie's all over that.
She's all a masters in statistics. Oh my goodness. So, Stephanie, people are telling me I really have to pay attention to this labor report this coming Friday. Is that because the Fed's really focused on that?
Yeah, this is the most important payrolls report of the year.
Wow.
For a couple of reasons. One, we're now starting to get concerned about the labor market. We have seen a deceleration in momentum in terms of jobs, and Powell said this. It's not about the level of the labor market, but it is about the speed. And the next couple of prints are going to be really noisy outside of this one. So once we get the October print printed in November, we're going to have the impact of Boeing strikes, potentially. We're going to have the potential impact of port strikes. We're going to have the hurricane. And that could last for a couple of months. So this is one of the cleanest reads we're going to get in a point where the labor market is the most important thing here.
So stepping back from that, I mean, how do you kind of view this labor market? Again, some people are saying, hey, if you look at the absolute levels, it's in good shape, 4.2%, whatever the unemployment rate. That's kind of full employment. But There are others saying, boy, the most recent trends are troubling. How do you kind of view it?
Yeah, and the recent trends certainly point to a deceleration. And this is kind of what a soft landing looks like, right? At some point, soft landing and recession look kind of similar because you get that deceleration. And the question is where you stabilize. So what we're seeing right now is the labor market is fairly healthy. Claims are not picking up. We're seeing job openings even yesterday that kind of stabilized. So our base case is that the labor market is going to stabilize at a level that's similar to what we saw in 2019, which is a healthy labor market. One reason to believe that is forgetting about the labor market data, but if you look at consumer spending, that remains really healthy. It's running at about a 3% realized pace, which is better than most folks would have expected, especially if you're concerned about the labor market. This is just another economic data point that tells you that the economy is really doing just fine.
Stephanie, Goldman Sachs came out with, I believe, a 3.2% run rate statistic on real GDP, which dovetails with your optimism on the labor economy. Do we still have a legitimate real wage?
Yeah, we do. We certainly do, and that's one reason why the consumer is still able to be spending. And now that you have inflation slowing back down, pretty considerably, now your wages are your real wages are at least in positive territory, which is a good thing. For a period of time, that wasn't the case because inflation was running so high. But now your inflation rate is running at or even below 2% if you look on a 6-month basis. So consumers are actually able to be in a better position. And then we didn't even talk about interest rates, which are now starting to come down. So you're having an easing in financial conditions at a point where inflation is now running back down towards 2%. So that's a good impetus for the consumer.
So let's step back and what is your view of the consumer? We've had a lot of companies kind of calling out the lower end of the consumers really struggling here, whether you look at the numbers out of a Walmart or a Target or the dollar stores. How do you view the consumer here?
The consumer's okay, and that's been the case for a while. We've had, for the past year and a half, we've heard companies come out and talk about the decelerating lower end consumer, and that has absolutely been the case. There has been a divergence between the middle and higher end consumer versus the lower end. But now there's a good reason to believe that actually that lower end consumer could start to do a little bit better. Their credit card interest rates are going to be coming down. And, it turns out the savings for the broad-based economy is actually a bit better than what was previously reported. Right. We just got GDP revisions last week that told us that the savings rate is closer to 5% rather than 3%. So the consumer actually has a bit more buffer than we previously thought. And Powell talked about this the other day, highlighting exactly the same concept that, now maybe the consumer is a bit healthier than we thought. So you might still hear a little bit of softness on the lower end, but we should actually start to see an inflection point where things get a bit better for the consumer.
Hugely valuable, folks. This is what it's all about, the distinction of our conversations on Bloomberg Surveillance. Stephanie Roth, they're pushing against the caution on the American labor economy. Stephanie Roth is with Wolfe. In about 7 minutes, we're going to have a really important conversation. John Farrow in conversation with Mark Rowan of Apollo. This could be a 2-hour, 3-hour conversation today.
Yep.
And I want to frame this. I want to frame this for everybody out there who's either lived this, been tangential to this, or just worry about it. You're at college and your father dies.
Oh.
What do you do?
Okay.
Mark Rowan was in school. His father died.
Okay.
They couldn't get it done like so many. And his school said, don't worry about it. Pay us when you can.
Really?
That's the coolest thing.
Yep, that is a
We
good
say
story.
Good morning to the University of Pennsylvania and all of Warren. Mr. Rowan, of course, a huge philanthropist to his alma mater. But that's just an amazing story. And, of course, Mark Rowan, with his commitment to the Jewish community, with the UJA, and as chair of the board there, I should say, Paul, a timely conversation coming up with John Farrow on Israel and what we've seen in the last number of hours.
Very good. So we'll keep on top of that because geopolitics front and center once again here with the port strike. Tom, we're going to get some more reporting on that as we go to day 2 here of this thing and what the ripple effect is going to be. And that's kind of where we're trying to get a sense of.
I'll frame this out again. I don't have the time right now, but just on a boxed basis, Brent crude has gone from -2 standard deviations right up to +2. Very elegant chart, actually, here. It is 75.92 on Brent crude. John Tucker had that up 3.2% on Brent crude. We'll talk more about that. Coming up, Mark Rowan, Apollo Global Management. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News, and with this Bloomberg Business Flash, the major stock averages, they are lower right now. Dow futures down 120 points. That's a decline of 0.3%. S&P E-mini futures 8 points lower. The NASDAQ futures right now 7 points lower. Humana, one of the biggest decliners on Wall Street this morning. Health insurers saying the proportion of its Medicare Advantage membership enrolled in highly rated plans dropped to almost a quarter overall from 94%. This change actually threatens to reduce revenue at Humana, and the shares pre-market down 19%. Nike, among the most actively pre-market, down 7.5%, withdrawing their full-year sales guidance. They cite the leadership transition that's going to take place later this month. And I have to mention stocks of Chinese companies soaring in the wake of the landmark stimulus there. So this is Hong Kong trading because China's closed for holiday. We saw 400% plus gains in just some of the penny stocks, and also a doubling in share prices of several of the property developers, for example. As we look to the commodity space right now, Brent crude up 3.3%, $76 a barrel for the international benchmark. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. Paul and Tom.
John Tucker, thanks so much. Right now, as we mentioned yesterday, private equity, private credit, front and center. Paul's really done a great job of leading the charge on this. I visited the Apollo Global Management offices, sort of cross town.
Yep.
You know, it's like you can't do the drive during the UN.
No,
but you can do it.
It's a nice walk.
It's
a nice town, sprightly walk.
Exactly, for you. And you know, you go to Apollo Global Management. It's a timely conversation on private equity. Here now is John Farrow with Mark Rowan.
Lisa, thank you. This was the deal. We agreed to it. If the stock closed at an all-time high on Investor Day, Mark Rowan would show up alongside me, and he's a man of his word. Mark, good morning. It's good to see you.
Thank you. And technically, you're here. You came to visit us, so thank you.
Thank you. You planned it this way, I'm sure. Big target for 2029, $10 billion of annual earnings. I think we have to start with a pretty broad question. Rates are coming down. Economy's pretty decent. Let's just call financial conditions easy. Why are people coming to you instead of just issuing a bond in public markets?
I think if they come to us when they can't issue a bond in public markets. And can't is not that it's not open. It's that they want to do something that the public markets will not allow. Public markets over the past 2 decades have become very vanilla. Call it beta. If you want to do something unique, if you want to finance the next generation of infrastructure, you want to build a project, you want to build data centers, you want to build power, you want long dated, you want special features, that's just not available. You come to someone like us, and increasingly, private markets are offering really compelling solutions to investment-grade borrowers.
Let's talk about some of those deals. AT&T, AB InBev, Intel recently. What's the common theme behind those 3 companies for you?
The common theme for us is excess return relative to the credit of the underlying borrower. The common theme for the issuer is they are achieving something they could not otherwise achieve. When we did AB InBev, some $6 billion years ago, everyone around us, our peer group, that was interesting. That was one-off in COVID. You'll never do another one, another investment-grade private deal. $100 billion later, we're still doing investment-grade private deals. And I see nothing but a long line of interesting borrowers and interesting situations, because think about what we're doing in the world today. We are building infrastructure. We are building and changing energy transition. We're just at the beginning of this. And we are building the next generation of data and power. Every one of those things is long dated. Many of them are complex financings. Some will go to the banking system. Some will go to public markets. But increasingly, for these more complicated financings and long-dated financings, private market investment grade is where borrowers are coming.
There was a theme in Investor Day, and you've talked about this with me yourself privately. Global industrial renaissance. What are you talking about?
We're talking about just this massive need for capital. I mean, you can believe or not believe all the figures that are out there, but when you add up the amount of money that is needed for energy transition, the amount of money that is needed to fix our infrastructure, the amount of money that will be needed to build data centers and power to supply them, much less to connect and redo our power lines. You're talking about the amount of money that's been spent since the invention of fire. all with a backdrop of the U.S. government borrowing $2 trillion to finance itself on a current basis. This is not a question of will private markets grow. The question will be how much. Yes, public markets will continue to play a really important role, banking system, really important role. But this tool, this notion of private investment grade, has really not been available to CFOs or others arranging financing, and increasingly it will be.
How labor intensive is this for you? And as you do more deals, do you get a benefit from that you are able to replicate things and use less and less people to scale up?
The scars of experience.
Yeah.
So these are all labor intensive, and that is actually what the competitive advantage is. The investment grade bond market became so efficient and so low cost that financial firms stopped allocating resources to it. There was just not any money in doing that. And so the market is very available, but it is very plain vanilla. Almost no one has built what we've built. When you look at employment at Apollo, the greatest group of employment, 4,000 people, some $8 billion that we've spent over the past 15 years, all goes to what we call origination. Now, not all of these originators are out calling on investment-grade borrowers. Some are running other types of origination vehicles: aircraft finance, fleet finance, receivables finance, inventory finance, infrastructure finance. Increasingly, this is how America borrows.
Introduce Citi and a $25 billion partnership. What's behind that? Is that an acknowledgement from you that you've got more cash than you know what to do with?
I think it's an acknowledgement that origination, the control of the product, is actually what has value. And some of that origination we're going to build ourselves, and we've built more of it than any. But let's face it, a whole industry, is short origination. To the extent we can find a meeting of the minds with Citi, that's fabulous. And I think the bigger theme here is the banking system, particularly one of the big four banks, is actually figuring out what we believe all along. We don't want what the bank wants. We don't want the bank's customer. We want the asset. The bank, we can't offer advice, M&A, derivatives, hedging, foreign exchange, payments, credit cards, or any other service. The bank wants to offer those things. The bank sometimes wants the loan, but more often than not does not want the loan.
Who do you think fielded the most calls that day when that was announced, that partnership? Was it Jane Fraser and annoyed asset managers, or was it you and annoyed bankers?
From the comparing of notes last night, it was Jane.
It was Jane? Did you get the calls yourself from other banks?
We definitely got a few calls.
Do you get the sense that this is the beginning of something bigger? 25 billion is the number with Citi. Just give me an idea of what this looks like further down the line. Does it include other banks too?
I think it does. And now, I think it is difficult to serve lots of people in the same way with the same terms, but the Citi partnership is focused on a certain type of borrower. I think you'll see international partnerships. I think you'll see investment-grade partnerships. I think you'll see infrastructure-related partnerships. I do think that we are becoming a partner in some ways to the banking system, rather than how it is portrayed in the press, which is, a fierce competition over everything.
This conversation so far has really been about how the financing of companies, particularly in this country, is changing, how the companies doing the financing is shifting, the emphasis being on private markets. Part of your vision is how investing is going to change as well. So let's spend some time on that. How is investing going to change? How do we think about public versus private now? And how do you hope we're going to think about it in years to come?
Look, for me, this is year 40. It's sometimes hard to believe I've been doing it this long. But we grew up thinking private was risky and public was safe. And probably 40 years ago, that was true. Private was three products: private equity, venture capital, and hedge funds, all three of which can be risky, but done the right way are excellent investments. And public was 8,000 public companies, diversified portfolios of stocks and bonds. Let's just say that's not how the world is today. The world that we see, private is safe and risky, and public is safe and risky. And if that's true, everything we know about portfolio management, the way we construct portfolios today, is going to change. Think of the typical investor. A very bland, I say a 3-flavor ice cream portfolio.
Sure.
Stocks, bonds, and a little bit of alternatives. Why? Well, because when something is risky, you put it in a small bucket called alternatives. You watch it carefully, and you demand high returns out of it. But if private is just another form, I think what you're going to see is the whole business of what I call replacement. Fixed income, which today means investment-grade public credit, I think is going to be investment-grade public and investment-grade private. 18 months from now, I do not believe investors will actually know the difference between investment grade public and investment grade private. It will not be the issuers. It will not be the size. It will not be the ratings. It will not even be the liquidity. Everything that exists in the public markets, repo, borrowing, market making, daily pricing, is coming to the private markets.
What is the total addressable market? What kind of numbers are we thinking about?
We're talking about massive marketplace. When we look at the entirety of our industry, the entirety of our industry has been built out of the alternative bucket of institutional investors. The fixed income bucket, which is the one I'm talking about now, is 50% larger than the alternative bucket and is mostly 100% public investment grade.
Equity, different to debt. Can you tell me how that's going to be transformed and whether some of the companies that typically would be going public are going to stay private? Whether we're going to see a big shift in capital markets over the next 5 years or so on that front?
Well, we're seeing it already. So this is a two-pronged answer, which is 8,000 public companies is now 4,000 public companies. Fewer than 100 companies go public every year, and more than 100 companies go private. There do not seem to be compelling reasons for companies to be public, particularly with what's happened on the investing side. So much of our market today is indexed and correlated. Think of passive now 60–70% of the overall marketplace. Active management, which historically has been the buying and selling of stocks, has really been a very, very difficult place to be, has failed to beat the index 90+% of the time for 20 years. I think we're going to see an evolution also take place in equity. It's going to happen more slowly. In fixed income, we are going to see fixed income replacement. Public and private essentially come together. And the reason I know that is we're seeing it every single day. And in fixed income, we have arbiters of credit quality, rating agencies, who tell investors that something public and something private is of the same quality. In equity, we lack those arbiters. But nonetheless, I think investors are beginning to understand when 10 stocks are 35 to 40% of your portfolio, and 4 stocks have determined all your returns for the past 4 years, and 1 stock has basically been 100% of your quarter. I mean, think of what we've done as a country. We've taken the largest pool of savings in the world, 401k, $12 to $13 trillion, from a group of people who need retirement savings more than ever. What do they own? They own daily liquid stock index funds, generally S&P, for 50 years. Why? Well, we have a mistaken belief that public is safe and private is risky. You look at the best retirement system anywhere in the Western world, in Australia, where they've introduced superannuation 40 years ago. Just a fancy way of saying is they gave the equivalent of 401k investors access to private markets. The returns have been nothing short of spectacular. Outcomes for investors can be not a little better, 50 and 60% better.
You know the view here, public is transparent and private is opaque. How do you change that view?
Well, I think it's going to happen in fixed income. I think when you get to daily pricing, when you get to daily liquidity, when you can see a market, but let's not fool ourselves. Markets are different than we think they are. Everything changed in 2008, as it should, as a response to the financial crisis, but we just did not experience as investors those changes because right after we changed the rules, we printed $8 trillion and everything went up and to the right. One of the most interesting things that changed, there is no liquidity in public fixed income. The stats I've seen, it takes 5 days to sell an investment-grade corporate bond. So when you see a quote, is that liquid? Well, we feel good because it's public, it's there, we can see it. I do think we're going to end up not caring in fixed income in the next 18 months as to whether something is public or private. The comfort that people are developing in private markets on the fixed income side, I believe will eventually extend to equity, and we will see equity also adopt private side by side with public. As I sometimes joke, investors will own equity that is private rather than private equity, the difference being the leverage.
You say we, you mean investors. Do regulators see it the same way?
I think they do. I mean, the conversation with regulators is actually a fascinating one because clearly change is scary. But the typical conversation is every dollar of borrowing that moves outside of the banking system to the investment marketplace. And let's face it, there are only 2 choices for regulators. Money in an economy can come from investors or from banks. There's no third choice. So every dollar that moves actually delevers the banking system and makes it safer. And people recoil in shock, and this is just math. A bank is levered 12 to 14 times. The typical institutional investor is levered 0. The typical mutual fund, levered 0. Typical BDC levered 1.5 times. Typical retirement services company levered 8 times. It is deleveraging. The second is disclosure. We think it's not transparent. The typical bank disclosure says loans to customers and loans to companies. You click on our website, you can see every security we own every quarter. Then you talk about maturity transformation. Maturity transformation is really where the economy has suffered and financial markets have suffered. Banks are in business to do maturity transformation. They borrow short in form of deposits and lend long in form of loans. That's not a bad thing. That's just how they're set up. In the investment marketplace, generally you're talking about investors who are matched from a maturity point of view. And the final thing that I always sit with regulators, what percentage of assets in the US banking system are investment grade? They don't know. We have a perception that they're all investment grade, but the reality is about 60% of bank assets are investment grade. You look at a balance sheet like ours, and just as an example, we're 90+% investment grade. And so it's change, but it is actually change that is making the system more robust and more diversified. And we, let's make no mistake, we are the envy of the world. We, the US, are the envy of the world.
Mark Rowan of Apollo Global Management, a brilliant interview with John Farrell. All of that for Global Wall Street. We welcome you on those important conversations on private equity and private debt. Paul Sweeney was taking notes on that.
I learned a lot there.
It was, but what's great about that from the summa cum laude from Pennsylvania, and with all of his experience, was they're looking at the social good after 2007, 2008 of a less levered system. You've lived the leverage.
Yeah, I mean the banks were, and still are obviously
14 to 1,
a major, obviously source of growth capital. But he is saying effectively that private markets, equity, fixed income, they continue to grow.
I mean, just extraordinary. We thank John Farrell for that conversation. Look for that out on all of Bloomberg Digital. We'll have some of that out on YouTube and Bloomberg Podcasts as well. Bloomberg Surveillance this morning, and we're brought to you by IBKR. Excuse me, I had a brain freeze. I was thinking about the Tigers starting lineup today. Bloomberg Surveillance today, brought to you by IBKR. With Interactive Brokers Forecast Trader, you can trade your views on key economic and key climate indicators. Visit ibkr.com/forecast and get started today. With the tensions of the world, maybe a little bit of earnings as well, Nike and Humana, very difficult this morning. Futures negative 10, Dow futures negative 141. The VIX out over 20, 19.45 right now on the VIX. Paul Sweeney's yield, the 2-year yield, 3.61%, higher yields, 3.76%. We had a 3.99 30-year, now 4.11. So a higher set of yields across a full faith and credit curve. On oil, Brent crude up 2.8%, up a full $2. It's gone negative 2 standard deviations out to plus 2 standard deviations. Eloquently, it's 75.60. There was a debate last night. Did you watch any of it?
I did not, but I got the highlights this morning. Much like you would go to ESPN for sports highlights, I went to get some of those highlights.
Yeah.
It seemed pretty reasonable. They acted like reasonable adults. There's some policy
They
discussion.
acted like Ed Mills. They were polite, cordial, deferential. Joining us now, the polite, cordial, deferential Ed Mills, policy analyst at Raymond James. I was thunderstruck, Ed Mills, by the decorum, almost to the edge of Kennedy Nixon just a few years ago, Ed, before your time. Is that where we're going in 5 years when all of this anger recedes?
Tom, I hope so. I was struck. I have folks on my team who are kind of somewhat newer. I don't go back to Kennedy Nixon, but I've been watching for my adult life all of the debates. And it's been remarkable. You go back to 2016, you go back to 2020, and it seems like this is the conversation we had. The more substantive debate was at the vice presidential level. And when you turn on the commentary afterwards, there is a lot of conversation of would the American people prefer these as their candidates? I do think it's nice to actually have a debate where you have candidates turn to each other and say, I actually agree with what you said, but here's my vision. And we had that multiple times last night.
So, Ed, I mean, the reality is vice presidential debates have little impact generally on the broader general election. As we make this sprint here towards November 5th, what is the goal of each campaign, do you think?
Yeah, Paul, I think that's absolutely correct. What we wrote in our note at Raymond James was the goal of a vice presidential candidate is to get the American people to have comfort with him or her on whether or not they could be president. And I think both of those candidates clearly cleared that bar last night. As we look to your question and what the sprint is to the end of the month here into November 5th, is trying to get momentum back for the Trump-Vance team and trying to maintain the momentum for the Harris-Walz team. And I continue to believe we have 7 swing states, but as I do my maps, it's very hard to see one side winning unless they capture Pennsylvania. So it's going to be essentially all 4 of those candidates should take up residency either in Philadelphia or in Pittsburgh and see what they can get out of that state to see who can win this election.
So, Ed, I mean, Tom and I, by our math, we think there's 42 people maybe in the state of Pennsylvania that are going to decide this election. I just don't recall it ever being so tight. It seems like a new world of campaigning, a new world of politics, seemingly it gets tighter and tighter. What, in fact, can be done between now and November 5th by either side?
Well, I think it's an important question because we do have the fact that we are just started the month of October, and we have a list of potential October surprises. So for Harris, I think it is about trying to contain those surprises, trying to contain some of the momentum that she's had since she's announced as a candidate. And for Trump, what we're watching is back in 2016 and 2020, he had a surge at the end. Is he able to capitalize on this and get that surge once again?
Yeah, Amy Walters' note out at Cook Political Report, Ed, this morning is jaw-dropping on the closeness of this and the dynamics here. She takes undecided in swing states from 10% down to 5%. Ed Mills, 2020, NPR, quote, just 44,000 votes in Georgia, Arizona, and Wisconsin separated Biden and Trump from a tie in the Electoral College. Are we closer now?
Potentially. And I look at that and I say, if it does come down to Pennsylvania, Tom, there's a law in Pennsylvania that does not allow you to open up ballots that have been mailed in until 7 p.m. on election night. And so it's very possible that we would have the repeat of 2020 in Pennsylvania where same day votes favor Trump. You have an election. If it hinges on Pennsylvania, what I am concerned for from a market perspective, from voters and the American people accepting the outcome of this election is I don't want it to come down to one state and have that lead dwindle as kind of votes get counted and then a doubt set in.
Ed, a civics question with your expertise here and folks, Ed Mills for decades, legislative experience, and of course his work at Raymond James. When someone says to you, mail order votes are shady, uncountable, whatever other language you want to do, how do you respond to that?
I point to the literature that shows that they are incredibly kind of safe and easy way of doing it. We have a couple of states, Utah, Washington State, that kind of almost exclusively vote by mail. When I started in campaigns, it was the exact opposite. It was disproportionately Democrats that showed up on the same day. And a lot of conversations was, how do we shift that kind of politically one way or another, depending upon which side you're working on. So it's pretty remarkable. It's only in recent years where you've had those concerns pop up into our conversation.
Ed, what should we be looking for down ballot for each of these parties here? Are there certain states, certain seats that you're focusing on?
Yeah, so in the House of Representatives, I think the switch from Biden to Harris has probably had the biggest impact. Something I'm looking at there is that Democrats need to pick up about 3 or 4 seats in the House of Representatives to win the majority. There are 8 Republicans in New York and California who are labeled as toss-ups. And so to the extent that the Democratic base has been energized since Harris has gotten into this election, those Republicans have a tougher kind of road ahead for them. On the Senate side, you look at the fact that Tester in Montana probably could decide who has a majority in the Senate, and Tester's underwater. So Democrats have moved into Texas, moved into Florida. The question there is that a recognition of they are very much underwater in their attempt to keep the majority?
Adding a 30 seconds, John from just east of Newark, New Jersey, asks, is the SALT tax going to get fixed?
If Democrats win, I think the SALT tax expires and resets to being unlimited. I think that there is a Republican sweep. It stays as is. If Republicans win, but there is a Democratic House, look for a compromise at $20,000 versus $10,000 and an income threshold of $500,000 to qualify for that higher $20,000 tax deduction.
John thanks you for that response. Ed Mills, brilliant with Raymond James this morning. What an election.
I know.
It's just amazing.
Yep.
We were told, folks, just to give you a perspective here, to clear our calendars all the way through to Sunday after the election.
Wow.
I mean, you know,
it's going to be
just that simple.
Yep, I think you're right, Tom.
All the different broadcasting options. What do we do? Well, after the news flow, we have to believe. I mean, that's just no question about it. Great conversation here with Mark Rowan and John Farrow and Ed Mills. Lots more coming up. Aaron David Miller in this hour on the conflict in the Eastern Mediterranean.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo on assignment. John Tucker in for Lisa Mateo. An extraordinary Tuesday to the markets, to the world, with all that we see in the Eastern Mediterranean. Aaron David Miller will be with us in this hour with a bipartisan perspective on international relations, working for both Democrats and Republicans. Really, really an important voice here on what we see. And Paul, we see the effect here of the news out of Israel, out of Iran, out of Lebanon. Jumana Bersachi, thank you.
Perfect. Great way
from
to start.
Dubai. exhausted from her day.
Exactly.
With Horizon coming to us. Very nice of her to come to us from her abode in Dubai. Brent crude 75.56, up 2.7%.
Yeah, Tom, and that's all you have to look at to get a sense of where the market is kind of gauging risk right now. And over the last 48 hours, Tom, coming out of the Middle East, it is up another notch, and you see that in the commodity markets.
The future's a little bit negative 16, the VIX 19.69. Bloomberg Surveillance this morning, brought to you by Cohn-Resnick Advisory, Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. And we thank Cohn-Resnick for their support. From the Interactive Broker Studios, the Bloomberg Business Flash, John Tucker.
All right, Tom and Paul, traders awaiting Israel's response to the missile barrage from Iran. Brent crude right now topping $75 a barrel, is up 2.8%. Shares of Humana plunging, the proportion of its Medicare Advantage membership enrolled in highly rated plans dropping to about a quarter overall from 94%. Nike also among the most active pre-market. Those shares are falling after the sportswear company withdrew its full-year sales guidance. Google working on artificial intelligence software. It resembles the human ability to reason, similar to OpenAI's. This marks a new front in the rivalry between the tech giant and the fast-growing startup. Quick look at the yen this morning. That is weaker. It takes 144.79 yen to buy $1. So that's a decline of about 0.8%. Japan's prime minister said the economy there isn't yet ready for further interest rate hikes. And he's pretty closely aligned with the Bank of Japan and his thinking. China's stimulus, here's a stat for you. Handing more than 25% returns of September to some hedge funds as the stocks there surged.
You were on that, weren't you?
Unfortunately, no. But if you look at the MSCI China Index, advancing 23% for the month of September. So that would be the most since November of 2022. Dow futures down to 83, S&P futures down 15, NASDAQ futures 37 points lower. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
Thanks so much. First time I ran into this guy, like with Paul Sweeney, he was holding court on global corporate bonds at Credit Suisse Asset Management.
Yeah.
And Paul, that was back when there were inventories and risk, and if you held a bond and it went oops, it was like before all the computers and the trading and all that, there used to be some real risk in the bond space. People were sobered up back then.
Yeah, I don't know what's going on here, but I can sit in a 2-year treasury and get 3.6%. I might not need this guy. Tony Rodriguez, policy analyst at Nuveen Asset Management, joining us here in our Bloomberg Interactive Broker Studio. Tony, I've got a Fed that is starting to cut rates here, 50 basis points, and most people feel like they got a lot more room to grow. How does that change the way you guys look at the bond market these days?
Well, good morning, guys. I'd say that one of the biggest things that's changed over the last couple of weeks with the Fed going 50 versus 25 that's really kind of impacted our thinking was that our view was that one of the bigger potential mistakes that could occur here was the Fed staying too high for too long as we were seeing inflation come down and we were beginning to see this weakness in the labor market and the potential for that to spread out into the broader economy. By them going 50 basis points, I think they signaled that they're kind of on top of that, and therefore that downside hard landing risk was reduced. So from that standpoint, we think that it puts fixed income in a pretty good place. We always talk about fixed income as needing to do a couple of things for you, is give you some income, give you liquidity, give you stability. Well, we're finally in a world where there is income and there is, from our standpoint, some stability to the fixed income markets.
The heritage of Nuveen, other than the great seats at Comiskey Park for the Chicago White Sox, the heritage of Nuveen is to get people to be courageous and extend duration. What are people doing now, and what do you recommend they do in terms of having confidence to extend duration?
So when you look at the duration side of the equation, right now we think that when you look at the taxable market, the treasury market, we think that's pretty fair value. A lot is priced in already, so we don't think we're going to see a big decline from there. So we think in the taxable world, you want to be kind of in the short to intermediate part of the curve, call it 2s to 10s. But when you look at the municipal curve, there we are comfortable taking on duration. The municipal curve is steeper than the taxable curve.
I
The
love
ratios
this.
are better in the long end.
20-year?
So
come on,
we think the 20 years fine in the municipal space, especially because the
Right.
fundamentals are solid. So you can be comfortable taking on that credit risk.
They're those Duke perpetuity bonds.
That's right, exactly. How about, I mean, I'm looking at the INDO function, the Bloomberg Index browser, and in the fixed income space in the U.S., by far the best performance has been in the U.S. corporate high yield market. Talk to us about the high yield market. How do you guys look at that?
So when you look at why high yield has done well, emerging preferreds are up 10%, emerging markets are up 8-9%. So credit risk, like equity risk, has done well. And that's because we had some fears of that slowdown coming in at the start of the year. The economy's been pretty resilient, corporate profits have been resilient, therefore defaults have been low. So the high yield market, from our perspective, is attractive when you look at the kind of the double B, single B part of the world. We don't want to go all the way down in the deepest part of the credit quality curve because there are still some uncertainties out there. Obviously, all the geopolitical risks can cause some destabilization in the markets, but we are comfortable taking kind of that higher end of the high yield market credit risk.
Are you comfortable in the emerging market space? Because I got a Chinese economy slowing. I don't know what's going on in certain parts of the world, you know, in the Mideast and so on. How about just emerging markets as an asset category?
Yeah, as an asset class, I mean, clearly security selection there is pretty critical, but as an asset class, a lot of the headwinds that were there at the start of the year have dissipated. So the Fed now on its cutting cycle is very helpful. The dollar we think has peaked, so that's now behind us. And from a growth perspective, not only has the U.S. economy been more resilient, but now with China finally starting to do some monetary and fiscal stimulus, we don't think they're game changers for the Chinese economy, but we do think they help to stabilize the Chinese economy. And that's very supportive for emerging markets.
Tony Rodriguez-Naveen with us. You guys invented the unit trust, the concept of a different way to buy tax-free bonds. There is a revolution. Eric Balchunas, when he's with us, which is rarely.
Occasionally we get him.
ETFs, there's a revolution. Is there a new packaging of muni bonds is dynamic as what we see in equities with ETFs?
Well, there are ETFs. We have ETFs in muni space, and that's happening across the fixed income landscape broadly, taxable and municipal space.
Are unit trusts still around?
Unit trusts are still around. Essentially, closed-end funds are kind of a version of that. One thing that's maybe a new packaging is kind of interval funds where there's not daily liquidity, but you get either monthly or quarterly liquidity, allows you to extract that illiquidity premium out of the markets as an investor.
Right.
So that's a packaging that is somewhat new to the markets and, you know, having seen some growth.
Do you have separately managed accounts, like individual bond kind of stuff?
Absolutely. We're the largest player there. We're growing also in the taxable space. So separately managed accounts are very, very large at Nuveen, a growing part of our market. Advisors love it. Clients love it.
Well, this came up the other day, and I need this from you. This has great authority. If I have an SMA with you where I'm buying individual bonds, do I get taken to the cleaners when I buy an individual bond? Are you bundling it in an institutional pricing so I'm not run over?
And that is one of the big keys to the SMAs at a place like Nuveen, is that you do get institutional pricing, institutional execution,
right?
Because we trade for all of those SMAs jointly, and therefore can get the same
kind of liquidity. Any idea the basis point pickup that you get from that? Have you guys done any research on that?
We have, and you know it varies.
You're not going to tell me.
No, it varies by quality, but it gets pretty substantial as you get into some of the lower quality aspects.
Did you see Rodriguez comes in with the Orioles tie on?
I know, he's all set.
Yep,
up 1-0.
Mike emailed me. He says Tony's wearing an Orioles tie. I love him.
Fantastic.
Tony, thank you so much. The Orioles going to do it, the dreaded Kansas City Royals.
They have to do it today. Tie this thing up.
Yep.
Tony Rodriguez at Nuveen, Chicago. Thank you for being with us today. Oh, no, excuse me. That was Tiger's Orange. I misspoke. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. The vice presidential hopefuls debated in New York last night. There were no personal attacks, and for the most part, Republican J.D. Vance and Democrat Tim Walz were cordial. But things got a little bit testy toward the end of the CBS News vice presidential debate when the Minnesota governor asked the Ohio senator why former President Trump still claims he won the 2020 election.
This was a threat to our democracy in a way that we had not seen. And it manifested itself because of Donald Trump's inability to say. He is still saying he didn't lose the election. I would just ask that. Did he lose the 2020 election?
Tim, I'm focused on the future. Did Kamala Harris censor Americans from speaking their mind in the wake of the 2020 COVID situation?
That is a damning non-answer.
Immigration and abortion were also topics during the debate. Israel says it's preparing a counterstrike after a massive Iranian missile assault targeting Israel's major cities yesterday. Iran firing about 200 ballistic missiles in about 30 minutes. After that massive Iranian missile assault targeting Israel's major cities, multiple missiles penetrating that missile defense shield, one exploding north of Tel Aviv. One landed near Israel's intelligence headquarters. President Joe Biden will survey the devastation in North and South Carolina as rescuers continue their search for anyone still unaccounted for since Hurricane Helene caused catastrophic damage across the Southeast. The death toll is at least 166. And finally, we've lost John Amos. Amos, who starred as the family patriarch on the hit 1970 sitcom Good Times, has died. Amos also earned an Emmy nomination for his role in the 1977 miniseries Roots, and he also had a role in The West Wing. John Amos was 84. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. You're talking about Mark Rowan and what the University of Pennsylvania did for his family. Paul, this out on Twitter. My sister was at Duke. When my father passed away, my mom was left to put 3 kids through college. Duke took care of her tuition. She's now a successful doctor and medical director. They're forever grateful to Duke. Also mentioning that they beat UNC last week.
Right, exactly. Yeah, that's some good stories, and you like to hear those here. But, you know, Mark Rowan, I thought his conversation with John Farrow is just brilliant here this morning. I mean, I learned a lot, and he remains extraordinarily bullish about the growth of private credit.
But what about the illiquidity?
Yeah, I think what he's saying is the liquidity is there now, and it will get even better as more and more issuers, you know, go into this marketplace, and we'll have to see how it develops. But again, they've been on one of the leading lenders to investment grade rated companies. Direct.
Well, we'll have to see. A great conversation. Look for that out on digital media. John Farrow in conversation.
Pretty good. That John Farrow guy's pretty good.
Yeah, he's okay. Futures at -13. Dow futures -57. The VIX 19.59. We're out on YouTube. Subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're data dependent, so let's bring you some data from Roseland, New Jersey. ADP employment change. 143,000 jobs added. That's better than expectations and a lot better than the prior reading of 99,000. VIX elevated this morning, just under 20. Tensions in the Middle East putting markets in a wait-and-see mode. Futures lower, Treasury prices unwinding some of the gains that we saw yesterday in price. Geopolitical fears replacing optimism around the central bank easing as the driver right now. Farther out this week, investors are going to be watching for the non-farm payrolls data Friday from the BLS to check the health of the U.S. labor market. Among the most active pre-market, as we've been telling you all along this morning, Humana shares down over 20%. The Dow futures down 74. S&P E-mini futures 14 points lower. The NASDAQ futures down 38 points. Two-year yields just about 3 basis points higher, 363. The 10-year up about 5 basis points. That is at 377. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paula and Tom.
Thanks so much, John. Greatly appreciate it. Last night, I think the second beverage of my choice, I can't remember. I was going back and forth with Giuseppe's father and with Colin of the twins in Brockton, like saying, we need voices. We need people with experience. And they said, well, who? And I said, can you get that young Miller kid who was with George Shultz and James Baker just a few years ago, like Aaron David Miller 30 years ago, joining us now, a bit wiser, a bit older, Aaron David Miller out of Tulane, and of course definitive at the Carnegie Endowment for International Peace. I want you to tell me how the facts changed, Aaron David Miller. If I go directly west of Jerusalem, almost to the Mediterranean, to, I think it's Genera, I don't have it in front of me, a little village, 30,000 people, directly south of Tel Aviv, where a missile took out a school in the dead of night. No one was hurt. But how does that missile, Aaron David Miller, landing on that school in a small town, how does that change the dialogue?
Yeah, it's a town of Kadera, and whether that was a strike or shrapnel from an interceptor is unclear. But look, I think there are two things here, and by the way, thanks for having me. I really appreciate the kudos. Number one, what happened yesterday is virtually unprecedented. Certainly in the Arab-Israeli, Iranian-Israeli conflict. Iran launched 180 plus ballistic missiles, and unlike cruise missiles, these take only 12 minutes roughly to travel from Iran to impact in Israeli airspace. It was a saturation attack. It covered much of the country. Yes, it was directed primarily at several military bases and Mossad headquarters, but I've been to Mossad headquarters. It is not in some isolated area. So this could have been, to say the least, a catastrophe. And yet Israel's air-to-air defense, Iron Dome, David Sling, Arrow, managed to intercept most. The U.S., 2 destroyers, shot down a dozen or so. The Jordanians contributed as well. And I think that's the good news, that Iran may have 3,000 ballistic missiles, but it took a huge shot yesterday, and it essentially failed. At the same time, this is the second direct attack from Iran on Israel. The other one was April 13, 14. The Israelis are going to respond. I don't think there's any doubt. They cannot allow a, quote, new normal to be created. And even while they're degrading to Hezbollah to a point where it is a hollowed out shadow of itself, they're going to respond. Biden's going to talk to Netanyahu shortly before the beginning of Rosh Hashanah, which starts.
Aaron, just because of time, because I know Paul wants to get in. I got one more question. Paul's got a bunch of important questions. Robert G. Kaplan, Aaron David Miller would say, get out the map. From Armenia down to the tip of the Persian Gulf is 500 miles, and then it's another 500 miles, 1,000 miles total across from Dubai. That's the western border of Iran. Where should Israel attack?
Well, I think the strikes will be multiple. I think there'll be economic targets. There'll be strategic, conventional military facilities. There'll be IRGC command and control facilities. The nuclear sites, I'm sure there's an argument being made that now is the time. Hezbollah is weakened and no longer has the deterrent capacity. Hamas's organized military structure is gone. Iran's defenses are weak. So do it now.
Right.
I'm taking a flyer here, but I think the Israelis this time around will avoid Natanz and the enrichment facilities.
Okay. Because, I mean, Aaron, I think a lot of folks we're coming up to the 1-year anniversary of the October 7th attack here, and the scope of and the aims of this response from Israel have gone from decapitating Hamas and getting the hostages back to something much, much broader in the region. And as you suggest, perhaps the thinking is, if not now, when do we deal a really severe blow to Iran? What are the chances of that in terms of the nuclear facilities, do you think?
I think an argument can be made. U.S. elections coming. The Israelis have more margin for maneuver and operational capacity now. They probably will never have a more propitious moment. The question is whether or not this would be coordinated with the United States. Again, I'm assuming the Iranians are going to respond to whatever the Israelis do, most likely. There may be ample opportunities, but again, I'm thinking opportunity or not, the Israelis can set the program back. They do not have the capacity to fundamentally destroy it and permanently prevent its rebuilding. And remember, Iran is a nuclear weapons threshold state. They don't yet have a nuclear weapon. And I think that has to be taken into the mix.
Aaron, I've got to get this in with great respect to your public service back 30 years ago. What would Yitzhak Rabin say right now?
Rabin would not have handled October 7th the way this current Israeli government would have handled it. Rabin would have responded probably as forcefully. But during the course of that conflict, this man, who had a sense of strategy, understood the relationship between the application of military force and achievable political endgames. Rabin would have understood that Israel's involved in 3 wars of attrition, one with Hamas, one with Hezbollah, and obviously one with Iran. And I think he would have begun to understand and to work with, rather than not against, the United States and other regional allies, the Emiratis, the Bahrainis, the Saudis, on trying to figure out a way to create an alternative to Hamas in Gaza, and an alternative political reality over time in Lebanon. That's the difference, I think, between this Israeli prime minister on trial for bribery, fraud, and breach of trust in a Jerusalem district court, whose entire world is driven largely by his political future or the absence of one, if he should be convicted and have to cut a plea deal to avoid prison time. That's the difference.
This has been wonderful. Aaron David Miller, thank you for your contribution with Carnegie. There's no other way to put it. His wonderful book years ago out as well, The Much Too Promised Land. Aaron David Miller. I go back and I have the clearest memories of the assassination of Sadat.
Yep.
And when Jimmy Carter, now 100 years
100 years old.
Could you imagine Abraham Lincoln in 1909?
Wow. Yeah.
Think about that.
Yep.
I mean, that's the
Just
framework
extraordinary
here.
man. Yep.
But back to Carter and Sadat and Aaron David Miller, spanning so much of that is a kid out of Tulane a zillion years ago. Oil, I'm sorry, the tension is there.
Yep.
Elevated up $2, $75.55 on Brent crude.
Yeah, exactly right, Tom. And I'm just looking at the VIX for the equity markets for you. We're still below 20, just about 19.5 here on the VIX here. But again, some angst in the market. We'll see how it is. Again, a little bit of a light touch here. S&P down just 12 points here in the pre-market trading time.
So is Duke bull-bound? I mean, after that win
Darn close.
this
Darn
weekend,
close. Yeah,
they're
we'll
playing, well, you wonder with Helene if it'll Middle Tennessee.
Yeah.
You wonder, will it happen?
Yeah, exactly. So we'll see. But it's a fun season so far here. And then hoops coming up in just a month. How about that?
Well, that's what you care about.
Exactly.
It's the basketball's gospel. Futures at negative 13. Stay with us. Nationwide. Good morning.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Companies adding more jobs than expected last month. Figures from ADP show private payrolls increasing 143,000. Of course, the big number is on Friday with the jobs report from the Labor Department. The employment numbers taking on new importance as the inflation worries start to take a back seat. Some of the individual shares on the move in the pre-market. You have shares of Nike down right now 8%. Nike trading down, reporting a drop in quarterly sales after the close yesterday. And you look at Humana shares. Right now they are down 21% pre-market, among the most actively traded right now. They are plummeting as the insurer disclosed a drop in the critical Medicare quality ratings. That actually threatens to drastically reduce revenue at Humana. And we'll do Home Depot for you. They're being upgraded to buy from accumulate at Gordon Haskett. They see home improvement demand increasing as mortgage rates continue to fall. Not quite ready for refi, are you?
Not ready to refi the
Okay.
Jersey Shore compound.
Give it some time. Dow futures down 104 points. S&P futures 16 points lower. And the NASDAQ futures right now 40 points lower. Two-year yield is up just about 4 basis points, 364. The 10-year 6 basis points higher. That is at 379. And I'll give you Brent, the international benchmark, up 2.7%, 75.52 a barrel. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. All of our economic indicators, and going up to Jobs Day on Friday, our economic indicators brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support in technology. With us now is someone who runs some money, in charge of all the Dividend complex at Federated Pittsburgh, and also an author. I've said a lot about the immense intellectual challenge of Daniel Peris's The Ownership Dividend. It is a dense, short read on what's really interesting about how equity stocks became, and this is a quote from the book, U.S. stocks began moving in the direction of becoming nearly cashless investments. Wonderful to have you here. You mentioned buybacks. Maybe we've reached a peak. Can Apple just keep buying back stock? Mathematically, why can't they just keep giving profits, buying back stock?
Thank you for having me on the show, Tom and Paul. I would dispute the notion that they're buying back, that they're giving profits back to shareholders. I take a different view of buybacks. But right now, buybacks are very, very popular. They're going to continue to do it. I think their last authorization was $100 billion. It's a stunning amount of money. We're heading towards $1 trillion in buybacks this year. In fiscal or calendar 2024, dividends from the S&P 500 will be about 620 or so, 625. So buybacks are just wildly acceptable. From a shareholder perspective, though, a business owner perspective, investing through the stock market, buybacks don't really work
Why?
for
You
us.
end up with fewer shares. It gotta
If
work.
you do. Now, most companies announce share backs very loudly, but the amount of the share capital that they take out of circulation is always lower because they're issuing shares out the back door, and their timing of buybacks, the market's at an all-time high. The timing of buybacks is generally fairly poor. Companies initiate buybacks when they are flush with cash. It would be better if they did it when they were in the swale of their cycle, not at the peak. So there are lots of reasons why the blackboard math of buybacks, which in the academy is neutral to a dividend. I write books and books and books on why that's not the case, but why that's just not the case in the market.
I got to bring in our guest here because we go into a 3 a.m. meeting on Bloomberg Surveillance, and Sweeney's like a robot. Get Peris on, get Peris on, get Peris on. Paul, this is your guest.
Exactly. Hey, Dan, I mean, when I was a research analyst on Wall Street, I had my income model, I had my balance sheet model, but by far the most important model for me was my cash flow model.
Indeed.
I wanted to know where the cash was coming from and where it's going. So when you sit down with a management team, do you have a preferred strategy of, hey, you've got X dollars of free cash flow every year. We think this much should go to buyback, this much should go to dividends. Do you have a policy you like to talk to management teams about?
We are not in the interest of starving companies of capital. That is the number one accusation made against business owners in the stock market, minority business owners in the stock market seeking a cash payment for their capital. It is not that we're trying to bankrupt these companies, but there is a reasonable allocation. For the U.S. stock market for decades, U.S. economy for decades, indeed better part of 2 centuries, was able to grow very, very rapidly and have a dividend payout ratio of approximately 50%. Okay. So we're able to build an industrial juggernaut and still pay out cash dividends. Now you have tech companies and others saying, oh, if I pay a dividend, I won't be able to grow. The fact is they're using the money for other purposes. But I would say that we've been around a third for a while, for the last decade or two. I think the more appropriate level for a business owner approaching the stock market as an opportunity to own businesses over the long term is something closer to about half. And that's free cash flow. As you know, that earnings payout of nominal book earnings at this point is so polluted with the accounting challenges and the shenanigans of adjusted EPS and so forth that we really look at free cash flow.
So for, our stock market's been, for a couple of decades at least, driven almost entirely by big technology companies, even more so over the last few years. They'll give you a token dividend, Apple, Meta, less than 1%. What do you say to those management teams who have literally almost countless free cash flow every single year?
Yeah, and so this year we saw a couple companies move in that direction symbolically, token, no more than that. So I don't want to discourage that behavior, but they're not part of the dividend universe yet because the cash flows simply aren't there to the minority shareholder. So we like the movement in that direction, but it's not material yet. And so it's a journey, not a moment. It would be stunning if one of those large companies were to announce a dividend payment that amounted to 3 or 4% of their share price, of their market capitalization, and announce that they were backing off of the buybacks. But that would get our attention.
Discuss Duke Energy. Good morning, Tim Cook. I know you're listening on your commute today out in Cupertino. Duke Energy with a 3.6% yield. Their persistency of excellence over 20 years is jaw-dropping, coming out to about a 10% return. But their 5-year dividend growth is 2.02%. Which matters more, the yield or the dividend growth?
I'm not going to discuss individual securities, but I will answer the question. When you operate with a high yield, the hard part is dividend growth. So the U.S. stock market has a yield of around 1.3%. We target in our portfolios a gross yield between 4 and 5%. Duke meets that standard. Other companies do as well. At that level, the hard part's dividend growth. Where we spend almost all of our time is trying to figure out those companies that do have a reasonable cash flow payout. Are they in a position to grow better? You ask about utilities in general. They have been among the less rapidly growing dividend companies over the last couple decades. However, watch out over the next couple decades. The demand for electricity has finally stopped being flatlined. It has kicked up, and these companies are well positioned to benefit from that.
Okay, so Total of Paris. I mean, I don't want you to go into the individual stock, Paul, but I got a 5.1% yield and a dividend growth like Duke Energy of 3.5%. When do you know you're a yield hog or a dividend hog versus doing something intelligent like Paul does in his 501k?
So Total has its analyst day today in New York. I'm heading to that right after we sign off. And so we will find out what they're announcing. But they do, that company, can't discuss individual securities, but I can say the numbers that you presented have a reasonably good balance of dividend yield and dividend growth.
Right.
But your question again, where the risk of being a dividend investor in a stock market is exactly what you identified, Tom, and that is the risk of being too yieldy and not enough dividend growth. And that's what we work on sort of every day in the portfolio.
So what is that balance for you? I mean,
for us, it's roughly 50-50, meaning we are looking for an even 4 to 5% yield at the portfolio level, not individual securities, and roughly the same in dividend growth.
Okay.
And the harder part, I will tell you, in a 1.5% yielding market, which is all oriented towards buybacks and flashy, shiny new objects, the hard part's the dividend growth, and that's where we spend most of our time.
Dan Peris, thank you so much. Great to have you in our studios here from Pittsburgh, best baseball park in America. No question about that with the Pirates. The book is The Ownership Dividend, as he manages the dividend portfolio at Federated. Daniel Peris, thanks so much for being with us this morning. Red and green on the screen, sort of a churn here, flatness to the market, 19.30. We're into jobs day and all. John Tucker had that. I barely had time to look. ADP came out buoyant. Good morning, Stephanie Roth at Wolfe, who nailed that. The revision, slight markup to a better space, as they say. But ADP at 143,000, of course, claims coming out here tomorrow as well. It's a better space, sort of like the Detroit Tigers. They're in a space.
Big
Screwball's coming in and pitching
Can he
the
pitch
8th
again?
and the 9th today to put them out of their misery. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, John. Israeli Prime Minister Benjamin Netanyahu is vowing to retaliate against Iran after it fired about 200 ballistic missiles at Israel. A severe escalation of hostilities between the adversaries that world powers fear could spiral into a Middle East-wide war. We get more with Bloomberg's Ethan Bronner.
We're still gathering what we can figure out about. There seem to have been some apartments damaged north of Tel Aviv. There was a restaurant damaged. There was one man killed in the West Bank, a Palestinian. But I'm unaware of any other deaths or any very serious damage from this attack.
Bloomberg's Ethan Bronner. Iran's latest move was a reprisal of Israel's killing of Hezbollah leader Nassim Nasrallah. The Israel Defense Forces said most of the missiles from Iran were intercepted, and reports indicated only one person was killed, who was in the West Bank. Vice presidential nominees J.D. Vance and Tim Walz kept it cordial in last night's debate. The two running mates agreed that the problem of migrants in the U.S. illegally is a problem. One of the doctors accused of providing ketamine to Friends star Matthew Perry, who eventually died from a ketamine overdose, will plead guilty today in Los Angeles. Mark Chavez's attorney says his client deeply regrets providing ketamine for Perry's use and takes full responsibility. When sentenced, Chavez could get 10 years in federal prison. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Paul Sweeney, are there I get it that football, the way they've structured, week 5 coming up. I get it, but does anybody watch baseball anymore?
Yes, they do. Well, certainly the local ratings for a lot of the teams, like on Yes Network for the Yankees, Mets on SNY, they're great locally.
They're great
and nationally, they build throughout the playoffs. I mean, the national game of the week on a Saturday in August, generally does not get great ratings. But the playoffs do.
They start at 2 o'clock, and there's like 2 games like at 7 p.m.
Yep.
Michael Barr's getting out the Swanson TV dinners.
Yep.
He's
solid effort.
Stroh's beer, it works. But it's like glorious. But then are we going to go in the World Series back to this madness of 9 p.m. or even 8 p.m.?
I hope not. And what baseball tries to do is program, around the NFL. And the NFL is everywhere now. Thursday nights, Sunday nights, Monday nights.
They have to program it.
Yeah,
really
you don't want to go up
football.
against the NFL. I don't care if it's the World Series.
Maybe
so
they're
they try to
getting
deal
common
with that.
sense. Fred Lynn out with a tweet yesterday. Played for the Red Sox, better than good.
Yep.
The All-Star game, they're going to wear their uniforms now.
Oh,
That's
I like
smart.
that. Yep.
I like that.
They're like home and away, like the way it used to be.
Yep.
Well, ratings have always been a problem. Way back in '68, Tigers won the World Series. Was one of the lowest rated World Series ever.
Because no one cared about Denny McClain? Is that what you're saying?
That's what I'm saying. Yeah.
Okay. I just wanted to get that in there. Well, we don't want the Tigers playing against the Lions. That would be too much. I mean, Barr, we'd have to medically intervene. Red and green on the screen. Stay with us. Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Futures have now turned mixed. NASDAQ futures up 23 points, a rise of 0.1%. S&P futures pairing some of the earlier losses, now down about 5 points. The Dow futures 67 points lower, and that is down about 0.2%. Humana shares plunging about 20% of the pre-market. They say the proportion of its membership enrolled in the 4-star plans and above is going to plunge. This is based on the Medicare Advantage star ratings data. Nike shares also taking a hit this morning. They are among the most actively traded, down right now close to 8%. Sportswear company withdrawing its full-year sales guidance, citing the leadership transition later this month. The sales in the fiscal first quarter also missed expectations. Mideast news that is boosting the price of crude oil. Brent, the international benchmark, up 2.5%, 75.39. And this is an interesting one from the Journal. CPA, you say no way? Well, reconsider. States considering allowing prospective accountants to bypass a 5th year of school. This is a proposal by 2 of the national accounting groups. CPA candidates can use an additional year of work experience instead of schoolwork to demonstrate professional and technical skills. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Greatly appreciated. Odd Lots has been on fire. They've had a series of interviews that are really, really extraordinary, particularly a serious one here on the redo of nuclear energy across America. Of course, Microsoft doing a deal with Harrisburg, Pennsylvania to restart a nuclear plant. We'll get to that in a moment. But right now, Paul, we have no life. I mean, you escaped to Ireland, and I'm going to Europe here in a couple weeks and all that. But we don't have the Odd Lots life.
Of course not.
Joining us, Tracy Alloway and Joe Weisenthal, after watching Third Eye Blind at the Future Proof Festival.
Actually, Joe, you didn't watch, did you?
I may have gone to a local poker room, but Tracy could give a review of Third Eye Blind.
They're pretty good. I don't
I
know
saw
what
them
to
at
say.
their peak. My son wanted to go a million years ago.
When was
their peak?
We sit down, and sitting in the row in front of me is Roger Clemens. Because he was there. Because he wanted
good.
to sit.
That's a good one.
He could barely get in a seat. He was so huge. Also barely able to get in a seat is Sam Rowe. Let's explain. I want to get to nuclear energy. But speaking of energy, what Sam Rowe has done with academics brought over to buy, hold, and sell.
Oh, yeah.
It's great. What did you learn from Mr. Rowe?
He and I flew on the flight together home. We were literally seated next to each other.
Together?
Yeah, on the Gulfstream. And it was nice because I didn't know I was going to sit next to Sam, and then I was like, oh, there's Sam. And then at the beginning of the conversation, I love Sam. So at the beginning of the flight, me and Sam were like, by the way, can we just agree that we're cool not talking to each other because we've talked to each other enough so we could just be silent. So that was really nice. I love Sam. We talked to him. He has a very rigorous newsletter that he writes that's dedicated to the proposition of the very true fact, which is true 100%, which is that most of the time stocks go up, which is something that's really important and people forget. We debate all the time, but mostly stocks go up.
Tracy, what did he say about the bull market?
Oh, yeah.
Oh, well, actually, I just want to give a plug to the newsletter because it has the best name ever. It's TKer. So you know how journalists put in, well, yeah, there we go. Named after Tom Keene. But you know how journalists put in TK for blanks?
Oh, that's what it's about.
He couldn't figure out a name, so he just put TKer and then kept it because it was so good.
He also calls it ticker.
Ticker, yeah.
All right, talks about Odd Lots, nuclear power.
Yeah.
What's going on here? Because I'm hearing more and more about this because we need some power for these data centers.
So there's two things that I think are interesting. One is, in September we got that deal between Microsoft and Constellation to restart a reactor at 3 Mile Island. Incidentally, I didn't realize that the reactor was only closed down in 2019, so it's not like this goes all the way back to the 70s. But we talked to Jigar Shah, the head of the loan programs at the Department of Energy, and he made a great point that the other big story is the stock market's reaction to the news. Constellation Energy shares have surged, which could be interpreted as investors are saying, do more of these deals. If the stock had gone down, then they're like, oh, maybe we don't want to take the risk of engineering the restart of this reactor. The fact that the stock went up could be one of those market signals that finance is going to be there if people want to do more of these projects.
Well, isn't the move in nuclear these days to smaller facilities, maybe just facilities-based nuclear power centers.
Small
that seems
modular reactors
That
is a
sounds
term that we should
reasonable.
all get to know. Yeah, and Jigger makes this point as well. Like, we do not have to build massive nuclear plants that look like they came out of the 1970s, although 3 Mile Island is probably still one of those. There are more flexible options that are available to us. And also to Joe's point about the stock market reaction, one of the great things about talking to Jigger is he has a really good capital markets background.
Yeah.
And he kind of knows how it all works. And when Jigger Shah says everyone is excited about the stock market reaction to Constellation Steel, that's a reason to be watching.
Yeah, I think, anything related to energy is an intersection of two stories, right? There's the engineering, specifically, how do you build the thing, and then finance. And with renewable energy, in particular, solar, wind, so much of the cost is that upfront capital cost, because then the energy is free after it's built. Sorry. So it's really important to pay.
Come on, we've courtesy Tang for our guests. Have some Tang. Oh, do you see he brings?
It's really
odd lot?
yeah.
Do you see he has Odd Lots China?
We don't have Odd Lots.
You've never gotten a mug?
No, the surveillance, they go. They get stolen, whatever.
All right, we'll get you both Odd Lots mugs.
Odd Lots mug. There's a question about it. Tell me about, just because of time here, your effort on the strike. I featured Mark Levinson. I interviewed him when the book The Box came out. On all
we should talk to him again.
Yeah, it's a great book.
Get Mark Levinson in, but you talked to Craig Fuller of Freight Waves here. What did you learn the distinction of Newark, Savannah, and over to the Gulf?
Well, one thing I learned is that it's not as easy to just redirect a lot of that traffic over to the West Coast for various reasons. And I think I saw an estimate from Bank of America saying that every day of the East Coast strike could add like 5 days worth of catch-up time to shipping, which of course is exactly what you don't want to see potentially right before an election and when people are still very, very nervous about prices.
I saw Bloomberg economist Anna Wong said one silver lining maybe that right now retailers are holding an unusually high amount of inventory. So we may have a little bit of cyclical buffer in this economy. But of course that's going to get ground down quickly if this goes on.
And
a long
also
time.
doesn't apply to fresh items like bananas.
Bananas,
so buy your bananas now.
Exactly.
Yeah, I've been showing bananas because it's like serious. That's how they move bananas.
Yeah.
They move other stuff by airplane, I guess. What do you got forward? What are you going to do on the disaster known as the Eastern Mediterranean?
Disaster known as the Eastern Mediterranean.
Israel, Lebanon, Iran.
We don't have anything. We should probably, the one angle that I think is really worth exploring. I mean, there are many angles, to say the least, on this awful story. People talk all the time about arms deals and supplying arms to the U.S., supplying arms to its allies in the region. Right. How those really work, I think, is a question that I don't see a whole lot of analysis on. It's interesting too. Not much oil market reaction, right? Like it used to be when we were younger, that when you'd see the missiles fly in the Middle East, you would expect to see oil market reaction.
It doesn't move now.
It doesn't do it the same way, and I think that's notable.
Right. What else you got going on the bull market we're in? What I can understand is not the lack of, but the new quality of exuberance out there. It's so different than years ago.
How so?
It's just, it used to be individual stock, value line, chit chat, what's a cab driver do? And Paul, I don't see it now.
No, I think people feel pretty solid about this market, particularly with the Federal Reserve. So, do you expect this Federal Reserve to be slow and steady and all that?
Speaking of the value line index, I don't know if you caught it, Tom, but a couple of weeks when we were out in California, we interviewed John Rogers
from Ariel.
Okay. And he's an old-fashioned stock picker. He picks individual securities. And so for me, someone who briefly was interested in that stuff before everyone just talked about ETFs and the Mag 7 and the Fed, it was refreshing to talk with someone who still believes in the art of security selection.
Ariel has posted pretty high returns in recent years from old-fashioned value investing. It's kind of surprising.
Yeah. I would say in this time of earnest ESG and all that, John Rogers out of Chicago, unbelievably alone, invented social investment. He single-handedly invented social investment.
I mean, I do think it's funny that one of his example companies of business with a very large moat is the maker of the McFlurry machines at McDonald's.
Which famously break down all the time.
Which break down all the time, and this company has the contract to fix them.
We got to go. Have you had a McFlurry?
Yes, of course.
Oh, of course. Okay. We got to go. For Joe Weisenthal, we thought we'd do some new disco. Dua Lipa. Good morning.
Don't show up, don't come out, don't start caring about me now.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo on assignment, John Tucker in today. One of his 7 jobs today. His others to keep us up to date on 5 baseball games.
Yep, exactly.
All coming up. Tucker will report on that about 4 p.m. This afternoon. Michael Barr with us as well, getting ready for Tigers. Who are they play? They're not playing the dreaded Yankees yet. Their Tigers are, they're out there. They're
Kansas City? I don't know.
No, the Kansas City's playing Baltimore.
Yeah, that's right.
So Baltimore's got to come back.
They do have to come back.
We're out of a job if
exactly.
they don't come back. Program note, we like to get out in front of the story. Paul Sweeney, J.P. Morgan, earnings. I had no idea it was this quick.
I know. It comes
October
right up
11th.
Exactly.
Like 9 days from now.
9 days from now. And I tell you, for me, it's always great to hear Jamie Dimon, what he thinks about the economy, because he's in a position where he doesn't have to pull any punches ever. He just tells you how things are going, who's doing well, who's not doing well, and how the consumer's doing, how businesses are doing globally. So
we're going to dive into that in a couple of minutes here. Gina Martin Adams with us as well. On the oil front right now, West Texas Intermediate up $2. Brent crude as well. The level rounded up $72. West Texas Intermediate $75. On Brent crude. Gold gives it back $20, $26.71. Futures at -10. A churning and quiet market off of ADP was actually pretty constructive.
Yep.
I mean, it wasn't like Anna Wong doom and gloom.
No, and I just kind of look at ADP. I think a lot of investors, just for direction, it's as it relates to the jobs number, the correlations aren't always great from the government jobs data, but direction gives you a sense, and came in a little bit better than expected.
From the Interactive Broker Studios, our Bloomberg Business Flash, he's briefed. John Tucker.
All right, Treasuries, they were lower in price. You cite that to ADP number. Companies adding more jobs than expected last month. And, of course, traders waiting for Friday's all-important report from the labor market for some affirmation of that. We're also awaiting Israel's response to the missile barrage from Iran. Brent crude, that topped $75 a barrel this morning. Among the most actively traded in the pre-market, you have shares of Humana. They are plunging. They were down as much as 20%. The proportion of its Medicare Advantage membership enrolled in highly rated plans dropping to about a quarter overall from 94%. And then you have, after the close yesterday, you got results from Nike. Those are falling pre-market. The sportswear company withdrawing its full-year sales guidance. And the yen weaker. The Japanese prime minister saying the economy not yet ready for further interest rate cuts. And China's stimulus handing more than 25% returns in September to some hedge funds. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
Thanks so much. Very quickly here, Paul. Tesla South, 258, right now trading 252, has not found a bid yet. Tesla shares fall to pre-market low. on production numbers.
Yeah, I saw that. I thought the production numbers kind of generally came in line with expectations, but I guess the market was looking for something a little bit bigger there. So, I mean, total, deliverables of the Model 3, the Model Y, those are the popular ones. 430, call it 440,000. Estimate was for 435,000.
Recently, Tesla up next to the July highs of 270, but right now 258 down to 251, searching for a bid. We're searching for wisdom here on earnings season. Really, our first conversation in Q4 about the state of play, bottoms up. Gina Martin Adams joins us right now, Bloomberg Intelligence on equity. Gina, on a bottoms up structure from the 785 security analysts you have, what's it look like?
Great question. I think when we look at the S&P 500 at large, a couple of things really stand out for us for this upcoming earnings season. The first is expectations are extraordinarily low. The analyst consensus is expecting less than 4% growth in the third quarter when it compares to a year ago. That's well beneath the 13% run rate that we've been experiencing or experienced in the second quarter. It's still beneath the 8% average run rate from the prior 2 quarters before that. So analyst expectations are very low. Most importantly, though, they're low because of energy. And this really speaks to sort of today's highlights with respect to oil prices and what's going on with energy and the Middle East, the conflict in the Middle East, because the energy sector has been just this enormous drag on the index over the course of the last year and a half. It is still expected to be a big drag on the index. That's actually a good thing for the rest of S&P 500 companies. Talking to bottom-up conditions, the companies that use energy as an input are paying less and less and less for that input over time, and that's creating margin expansion, which is probably going to be the big key to this earnings season.
I don't want to catch you unawares, but if it's 4% doom and gloom, what is the Bloomberg Intelligence expectation of earnings growth of the Mag 7?
Yeah. It's a good question because what we're seeing in the Mag 7 is actually a deceleration in earnings growth from 30% pace, 30 to 50% pace, depending on which name you follow in the first half of this year, to closer to a 15 to 20% pace over the second half of the year.
That's a crater.
Incredibly strong, right? It's 3 to 4 times the pace of the broad index. It's still leading growth, but at a slower pace, so a sort of slower momentum than it was in the first half of this year.
So, Gina, I know in the month of September, reading your research, a combination of defensive and cyclical stocks drove some of the performance in September. Is that seems like a good thing to me. Is it? And B, will it continue?
Yeah, I think beauty is in the eye of the beholder, Paul, right? So some people are casting this as a negative sign because we did see leadership in some of the defensive segments. Utilities and real estate especially did very, very well over the course of the last couple of months. We see this as a catch-up where not only did the defensives lead, but other cyclicals also started to catch up to growth. We saw some improvement in other cyclical industries. Consumer discretionary kind of came out of nowhere with some relatively strong gains over the course of the last month. So I think that mix is indicative of a broadening story. It's indicative of a catch-up trade in some of the laggards. Defensives are some of those laggards, but so are other cyclicals. Now, the counter to that is many people just look at the defensive outperformance and they suggest, well, if defensives are outperforming, that's a bad sign for stocks going forward. I think when you combine defensives with cyclicals outperforming, it's not. But it is a very active debate right now in the circles of strategists and market forecasters.
Does that catch up? Does that rotation? Does that include small caps yet?
Look, small caps are contributing. They're just not leading, and they're lagging the gains in large caps still. So it does include small caps, but not as much as we would like to see. Small caps are still in an uptrend from their bear market lows recorded over the course of the last 3 years. They're digging their way out of those bear market lows, but they're not leading the market. And that's an anomalous experience. Historically, off of major bear market lows, small caps outperform. We really haven't seen that, and it's creating these anomalies for forecasters because it's unusual. I think it's reflective of the fact that small caps are much more levered to purely U.S. economic conditions. They also are very risk sensitive. So when you don't have tremendous boost in animal spirits, when you don't have strong sentiment kind of behind the market rally, small caps will naturally lag. And that has been the characteristics of this rally, has been only a few names have led it. We're slowly gathering more participation, but there's not a ton of confidence in the economic outlook. And until we get a little bit more confident that we're past the lows in the economy, small caps are probably going to struggle to produce the gains of some of their higher quality, more consistent, big moat, large market cap brethren.
Gina, I'm one of the many fans of your sector scorecard out there. What sectors are screening well for you guys right now?
Yeah. It's an odd combination right now of defenses and cyclicals. It is sending all kinds of strange signals. So right now we have healthcare sits toward the top of the scorecard, and that's really about an earnings recovery. But so do utilities and real estate and consumer staples. Financials is still toward the top of the scorecard. At the bottom of the scorecard, energy, of course, because of the lagging earnings sort of environment, but also consumer discretionary is down toward the bottom. So we've got this very strange mix right now which I think is frankly quite indicative of what's going on in the broader market. An odd mix of leadership. We're still trying to figure out who will be the new leaders. Is this just a slowdown in tech, or are we seeing a big leadership transition? It still remains to be seen. So I think that's what the scorecard is picking up on right now.
Gina, thanks so much. Really looking forward to October 11 as we launch our earnings coverage led by Paul Sweeney. JP Morgan got October 11th as well. Futures at -11 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, John. Israeli Prime Minister Benjamin Netanyahu is vowing to retaliate after Tuesday's missile assault by Iran. G7 leaders are holding an emergency meeting after Iran's missile attack on Israel, as the U.S. says it stands by its Middle East ally. Henrietta Trey's is managing partner at Veda Partners.
The United States and Israel were very successful in deterring, 121 ballistic missiles through a joint effort. And still the expectation is that you have to retaliate. You cannot let this go unchecked. Have to move forward with some sort of response from Israel. It's a very difficult line to toe for the Biden administration, particularly when Netanyahu over in Israel is seeing his internal popularity rise as a result of the attacks on Hezbollah leaders in the last couple of weeks and the general escalation that has occurred just in the very recent past.
Henrietta Trey's with Veda Partners was a guest on Bloomberg Daybreak. The war in the Middle East was the opening topic in what could be the final debate of 2024. Democrat Tim Walz went after former President Trump at the start of the CBS News vice presidential debate.
It's those that were closest to Donald Trump that understand how dangerous he is when the world is this dangerous. His chief of staff, John Kelly, said that he was the most flawed human being he'd ever met.
Republican J.D. Vance was quick to respond.
As much as Governor Walz just accused Donald Trump of being an agent of chaos, Donald Trump actually delivered stability in the world, and he did it by establishing effective deterrence.
The two running mates also sparred over immigration and the economy. Many residents of the Carolinas still lack running water, cell phone service, and electricity as rescuers continue their search for anyone still unaccounted for after Hurricane Helene's remnants caused flooding far inland. President Joe Biden will survey the devastation in the two states today. The death toll has topped more than 160. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Okay, folks, this is where we got to appease Michael Barr. Now, come on. Tyler Holton is pitching today for the Tigers. You got to go with him because he played for the Falmouth Commodores in the Cape Cod League. I mean, good morning. The Cape Cod League is like religion.
Yes.
When I was a kid, you go to Orleans and they'd play. There was like no stadium. They're like it's like
a high school.
Central Park.
Yeah.
And except that they got pro speed. But you got to go with Tyler Holton for the Tigers because he was with the Falmouth Commodores. That's all there is to it.
We'll give Scooble just a little rest.
He's good. Yeah, he is good. He was
Do you
fun to watch it.
If you're ahead of the Stros in the 8th inning, you gotta bring in Scooble.
Yeah.
to pitch Celeste. Am I right?
Because we can't have what happened yesterday where I almost fell off the chair.
I didn't think you'd be here today.
Loading the bases in the ninth, and nobody was out at the time. Oh. That scared me.
Okay.
Do you know he's claimed off waivers? I mean, the kid's career at Arizona was like shattered. Tommy John. The Tigers took this guy off waivers. Yeah. And he's pitching tonight.
2:30 is the first pitch here. So we got to get Mr. Barr out of here.
It's
Plenty of time.
abbreviated surveillance nap. I mean, that's all there is to it. Michael Barr, thank you so much. Love watching the Orioles. Orioles got to get it done. I mean, against the dreaded Kansas Cities. I mean, it's not there. Futures at -11. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, and the Bloomberg News. And with this Bloomberg Business Flash, the futures report. Markets never sleep, neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indexes, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. Let's start off with shares of Tesla, among the most active in the pre-market. Right now, they are falling over 3%. Tesla reporting deliveries for the third quarter that were a shade lighter than the Bloomberg consensus. Right now, that's the focus. I should also point out Tesla benefited from China boosting subsidies for electric cars. They actually saw a 6.4% increase in the quarterly vehicle sales. And Humana, also among the most actively traded in the pre-market, down 20%. The insurer disclosing a drop in critical Medicare Advantage quality ratings. So that threatens to drastically reduce revenue. And we're seeing futures right now. They are lower to mixed. Dow futures right now, they just turned down 17 points, appearing some of the earlier losses. S&P futures 12 points lower than NASDAQ futures. They were higher just a bit ago. Right now, they're down 35 points. And the 2-year yield, 5 basis points higher. That is up at 365 right now. The 10-year is up 6 basis points, pushing the yield down to 3.8%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paula and Tom.
John, thanks so much. Having this argument at home, Paul, about definition, like, you go to school and there's kids, my mother used to say, well, they float through.
Okay.
So, UNC, it's a college. I think is it to the west of Duke?
I don't know. It's
where they lose
a blip on a map
by
to me.
1 point.
Yeah.
Yeah, you don't float through with a double degree in economics and Russian languages.
Mm-hmm.
You just don't.
No.
I mean,
a little effort in.
You're watching basketball.
That's all I do.
And Scott Ladner's in the library going, Moscow, where's that from St. Petersburg? Joining us now, Scott Ladner, CIO at Horizon Investments. And what I love about this, Scott, is you're like really expert off the Wachovia days. It's swaptions. For those of you not in the know, a swaption, there's like plain vanilla interest rate swaptions and 8 others. This is where you flunk CFA level 3 as well. Is the derivatives market healthy right now, or are there shadows that you see when you look at the new modern, newfangled day trading in options, swaptions, and frankly take it over the futures market? Do you have concern about all this newfangled stuff?
You know, Tom, I'm not sure about having concern in the swaps market, because that really is still like an institutional market. I mean, you kind of got to be a pro to play in that game.
Yes.
But certainly if you go in the equity options world, and we have zero DTE stuff, and we have all these other, very much more accessible to the Robinhood crowd, then yes.
You could cut to the chase. Where is that disaster heading? I didn't editorialize that. Where is that heading?
I'm not going to lead the witness. No, look, I think so. Here's the difference between when I was an options trader back on bank days and what I see today. When I was an options trader on the bank days, we used to love getting retail flow, because it would all go different ways, and they weren't the smartest money, so you kind of wanted that flow. But now with and we saw it first with GameStop. Now retail money acts like one large institution, because they're all doing the same things. They're all talking on the message boards, and so now I'm not sure you want to be on the other side of all that option flow, because it's like it can be pretty smart money. It can be somewhat self-fulfilling too.
What are you seeing across your portfolios now that we've got a Federal Reserve that is in cutting mode? What do you see different? How are you positioning your portfolios differently?
So we've been pretty heavily overweight the U.S. for a while now, Paul, and it's like that's generally worked, but it hasn't been great for the last month or so, and especially the last week or so, because the biggest thing we see right now isn't necessarily things coming out of the Middle East. It's not really the Fed. The Fed is a relatively known quantity at this point. We can quibble about 25 or 50. It matters on some level, but not at the macro level. The thing that's really changing stuff right now in our calculus is the China stuff.
Okay.
And unfortunately, everybody's a China expert, but nobody's a China expert, because nobody really is inside the brain of the one man that matters over there. But he has done some things that make us think this one might have a little bit of legs. Changing the rules on property down payments, changing the rule, basically changing rules on how easy it is to buy property over there. Flies in the face of his previous mandate that houses are for living in, not for speculation. Now he seems like he wants to be for speculation again.
So are you suggesting nibble at China, begin to think about participating? I mean, there's huge uncertainty now, Paul.
Yeah.
After this seismic move.
I know.
What is the strategy on the Pacific Rim?
It's not just don't be short it. So like right now it is. Look,
lose the gloom.
Lose the gloom. You got to lose the gloom a little bit. Look, but I'm not sure this doesn't really change our longer term view or even medium term view of kind of China's prospects. I mean, they have a lot of challenges. They're in a balance sheet recession, get terrible demographics, all the things that we all know about China. There's a reason to be bearish on them longer term, but nobody's invested over there. Everybody's short over there, and these policies seem like they might have some teeth to it. So it's one of these where you can't afford to be short it. You got to play along and kind of dance while the music's playing, so to speak. That's probably not the best phrase to use right now, but it's basically play along and don't get caught short.
Your view has long been don't fade the employed U.S. consumer. What do you mean by that?
It means employed U.S. consumers that are getting wage gains spend what they make.
Okay.
And right now they've been earning about it's basically 5% nominal wage gains for a while, and that's a very healthy economy, because if people spend what they make, that is the fuel for earnings, and this consumer is still very underlevered. They're in fantastic shape with respect to debt ratios, with respect to debt service ratios especially, and so they have the capacity to take on debt if they want to, and everybody that wants a job's got a job.
So how does that manifest itself in the market, in your sectors that maybe you guys are overweight?
Yeah, look, I mean, we're liking healthcare right now as sort of a tangential AI play. We do actually think this market broadens later this year. I'm not sure it broadens all the way to small caps, because there's still some earnings issues over there. But this is is the markings of the type of a global growth environment that can broaden markets out.
I got to rip up the script. Now, remind us here. You guys are out of Charlotte. Did you come out of the Wachovia Combine?
Came out originally what was then First Union.
First Union
back
Combine.
Then. Yeah,
and they got their broker-dealer license from Wheat First Securities.
There you go. Yeah, that's right.
Which was a great firm.
Yeah,
I read Wheat First religiously back then. Scott Ladner, what have you learned looking west from Charlotte to this horrific hurricane damage? Is it a question of weeks or years to, for example, normalize Asheville?
It's definitely months. So the problem with out there, and it is horrific. It is the Katrina of the North Carolina mountains, no doubt. So the problem is you can't get supplies in. So there was no egress. You cannot drive to Asheville. You cannot drive to Banner Elk. You cannot drive to these places where there are people stranded and with no cell service either. And so it's right now I-40, which is a major interstate going into Tennessee, that's gone. And so they're saying it's going to take months to repair that. So that until that gets repaired, it's going to be a challenge.
I mean, it's just, I don't know how many people have been down there, but it's such a beautiful part of this country, that western North Carolina, the mountains. And you're right, it is rural and it is mountainous. And again, other than I-40, you're taking local roads around there, it seems like.
You are. And that's the logistics part of this is going to be a really, really big challenge. It's sad.
How about the eastern part of the state? How did that deal? Because usually that's what we're talking about, the eastern part and the shorelines.
It is. I mean, look, we like in Charlotte, for instance, we got some rain and there's some trees down and there's a little bit of issues, but it was really really concentrated. As you headed into the mountains, it's just where the track went.
Interesting. So I mean, back to the markets here. I mean, a lot of folks are just saying, do I stay in just safe stocks, big cap stocks, big balance sheets, all that kind of stuff?
Yeah, I mean, again, I think right now the safest place is still those mega caps, but we do think the better opportunity is going to be the broader market.
Scott, don't be a stranger. Scott Ladner with us with Horizon Investments here on the derivative business as well. To set the framework here on a Wednesday, futures -13, a little bit better tape here, 5 minutes before the opening. We're going to try to give you the opening bell. We'll do that with myself or John Tucker. We're making it up as we go, but we're also looking to Berlin, to an important conversation, the backdrop of the geopolitics and geoeconomics of all of the conflicts of Ukraine. And this is our Stephanie Flanders, a conversation with Lars Hendrik Roller and also with the French President, Emmanuel Macron. Let us listen now to the President of the French Republic.
I think it's much more important to have an interaction and try to confront our point of view. But let's say that for me, the EU has, in order to face this multipolar order that you mentioned, has to deliver its own agenda. And I think the big challenge for the EU, Mario Draghi just issued a report. I delivered a month ago a speech, and the tone of these approaches could seem very pessimistic. The EU could die, and we are at the verge of a very important moment. I think this is quite true. We are at risk. I think we delivered very concrete and positive results during the COVID crisis vis-à-vis the aggression war launched by Russia in Ukraine. But when you look at the picture, what is at risk is the growth model of our countries. And the fact that EU has to deliver more autonomy, and we are obsessed by that, and this is the agenda we put at the Versailles Summit, and which is now core for the European Union. But we have to deliver climate change, AI, defense and security agenda, and we have completely to reshape our own growth model, because the situation is the following. On these key items, we are lagging behind both the US and China. They invest much more, they are much more in advance. And when you look at the growth on growth per capita, if you take the past 3 decades, the US delivered an increase of 60%, we delivered an increase of 30%. And it's not sustainable with the social model we have. And you cannot adjust just on the social model because it's unbearable for your people and in the existing democracy. So I just want here to share some key ideas I have in order for our Europe to deliver this agenda. I'm definitely incomplete, and we will follow up. I will not speak about the crisis of our democracy and cover a lot of topics of the international agenda. I hope we will revert during the discussion. But if we want, clearly, to be more competitive and have our place in this multipolar order, first, we need a simplification shock. This is the first point. Why? Because we are at the technological border in terms of regulation. And you cannot deliver such an agenda alone. And today there is a desynchronization with the US and China. So we need a big simplification shock is to be discussed. We have to discuss about even some very recent regulation which can kill our business. And clearly we have to deepen the single market, because simplification is normally the DNA of the EU. But we didn't deliver following this DNA during the past few years. And this is a big issue. But on health, energy, data sectors, we need clearly to build an actual single market, because on these key sectors, we need an actual European market. And it's critical if we want speed and scale for our startups and our business leaders, because this is the only way to have a domestic market of more than 400 million customers, where today we have 27 domestic markets in these sectors. So simplification, deepening of the single market, and simplification regarding some new regulations. The second point is about trade and trade aspects. We lived in a world during decades where everything was based on trade in an open market, complying with WTO regulations. This is over. Let's be clear. 25 years ago, we thought that...
We say good morning to you with the opening of the markets here, and say good morning to Global Wall Street on YouTube and across this nation. Red and green in the screen on the opening. Dow Jones Industrial Average fractionally higher here. Humana has to open with a huge 20% plus decline. The VIX 19.55. Paul Sweeney's following. Brent crude 75.67. This is not a normal speech. This is in Berlin, the Berlin Global Dialogue Group with Lars Hendrik Roller. They will be in a panel with Stephanie Flanders of Bloomberg in a bit, but we are listening in a really extraordinary time after the Olympics for Emmanuel Macron, the French president. He's had an extraordinary political year, to say the least, now speaking on Europe, and we are told the panel will address what we see in Israel. Let's return to Emmanuel Macron on Bloomberg Radio.
You have to correct it. This is why I do support the Commission on electrical vehicles with China, and this is why, more broadly, I think we have to protect the level playing field in all the different sectors of our industry. Otherwise, we will be today, let's be clear, we are the adjustment factor in a lot of industries for global players. From steel to car makers and so on, they may arbitrage with the European place. But they just prefer the places where they are much more helped and the level playing field is killed by the current landscape. So we have to correct it, either by building the same instruments. December 2022, I did advocate for a European IRA. We didn't deliver. We were too slow, too fragmented, and there's not the right scale of subsidies. But second, we have to restore the level playing field in all the sectors impacted by subsidies, either Chinese or American. And this development would be incomplete without a strong coordinated European response as well to the environmental, digital, and security changes we have to face. And this is why, in order to deal with that, we need a coordinated industry policy. My third point is precisely we need a better coordination between industrial and environmental policy. The EU must become clearly the first continent to achieve carbon neutrality by 2050 with a European industrial base, but both. I don't suggest to do it by killing our industrial base, and I don't suggest to preserve our industrial base by renouncing our climate commitments. So this is a demanding commitment for the environment and sustainable development, but if it is well coordinated, it's also a tremendous opportunity for European businesses. That's why we need to continue along the path opened by the Green Deal, the Net Zero Industry Act, and the Border Carbon Adjustment Mechanism, but not with additional regulation, by focusing ourselves on very simple things which can help us to deliver this agenda. More investment, I will revert on that, because on climate change and clean energy, we invest less than the US, definitely. And by having and building more energy autonomy based on technological neutrality. And this is as well, for me, a matter of simplification and efficiency. But if we want to deliver our climate agenda, we need to be much more neutral in terms of technology, on mobility, on energy production, and so on. And this is a very good Franco-German debate. But what we need, in fact, is a low-carbon pilotable energy. What we have to create is an actual energy, single market. And what we did is exactly the opposite. Because by design, originally energy was not part of the single market agenda, fine, we have now to complete it. But even when we spoke about hydrogen during the past few years, we did it with the bias of our own domestic model. So we create discrepancies between renewables, nuclear, blah, blah, blah. Doesn't make sense. What you want to be sure is to produce low-carbon energy in any place of Europe.
We welcome you on YouTube worldwide, and particularly in France and in Germany. Paul Sweeney and Tom Keene here with the markets open. Trading a bit challenging. The Dow negative 158, SPX negative 20. VIX not out to a 20 level or higher, 19.85, up 0.59 points. We are with Emmanuel Macron with our Stephanie Flanders in Berlin. We're going to stay with this a bit more. We were uncertain the completeness and length of Mr. Macron's speech. Paul Sweeney speaks French, and he tried to figure that out for us earlier. But we're going to stay with Mr. Macron as he speaks of the European agenda forward, the immediacy that he sees. Again, the President of the Republic of France.
The necessity for Europe is clearly to help our players to scale on our soil and our continent, and we have to accelerate their ability to innovate. And the main driver of the difference between US and Europe, I mentioned earlier, is the level of innovation. And part of the explanation was the level of concentration of the market and the capacity of big players precisely to finance innovation. Look at the telco business in US and Europe. Telco is much more fragmented in Europe, much more under pressure of the consumer, so it's good for the consumer, but less in a capacity to deliver a big investment and innovation agenda. The result is that telco industry invested much more in terms of innovation and disruption in the US. And the result is in the productivity of your business and the capacity to innovate and create new players. This is why we have to set up common instruments to build a European industrial policy and strengthen the coordination of our national industrial policies. We have to accept to have European champions and not 27 European champions, and stop with a systematic geographical return and focus much more on our ability to deliver champions at the European scale. And we have to accept as well to be much more efficient in terms of R&D, innovation, and invest much more in innovation as a key component of this agenda. And it's true as well for the defense sector. We can revert on that. My last point is precisely about investment. When you look at the figures, we don't invest sufficient money. And we have to do at least two things. One, we have to invest much more European money on these key sectors in order to build our resilience, our strategic autonomy, and this innovation agenda. The current budget is not sufficient. And look at the situation. During the past decade, in fact, we tried to correct this European budget. With the Juncker plan 10 years ago, it was based on loans and guarantees, but it was 1,000 billion of loans and guarantees. And during COVID time, with Chancellor Merkel, we built a common agreement to have this big package to recover, 750 billion of equities, grants, and 250 on loans. This is a signal that we are short in common public money. We should not revert to the national scale and give more flexibility because it will depend on the fiscal space and it's a killer for the single market. We have to invest much more at the European scale, much more efficiently, focusing the money on some key players and key sectors, but on defense and security.
We will leave Emmanuel Macron now, giving lengthy comments on Europe at the Berlin global dialogue, an important effort there. Stephanie Flanders of Bloomberg will lead a panel there. But right now we're going to get perspective. Last night, as we sat with the shock of the images in Israel, the geopolitics stretching from the Syrian border down through Lebanon, Israel, all of the Arab states, and over to Tehran, one name came up. He is Mark Champion. He has done war duty in Croatia, many other places, including Bucharest, with the Wall Street Journal legendary. And we are thrilled that it's hard to believe, Paul, Mark's been with us over 10 years.
Yeah, absolutely. Fantastic.
Mark Champion writes out of Europe and is absolutely definitive on what Mr. Macron is trying desperately not to speak about right now. Mark Champion, it's wonderful to have you as we dropped in on Emmanuel Macron speaking in Berlin. Is there a united Europe in looking at a fractured Eastern Mediterranean?
There's not a united Europe about pretty much anything, to be honest. And the closer you get to geopolitical questions, the less unity there is. I mean, in fairness, the response to Ukraine is the one time where you've really seen an effectively united Europe, with just a few outliers, like Viktor Orban of Hungary, and at the beginning even he wasn't problematic. But that's really that is an outlier, and so you can rely on the Europeans to divide over most issues at some point. And you do have, some differences of opinion with, countries like Germany and the UK that tend to be reflexively very pro-Israeli and supportive of Israel. And then you have other countries, in the south, more like Portugal, etc., which tend to be a bit more skeptical and more supportive of the Palestinian cause, etc.
Our childhood framework of this, and Mark Champion, you and Paul Sweeney are far too young to remember this, is being transfixed by Peter O'Toole as Lawrence of Arabia, and he has a tizzy late in the movie over the Sykes-Picot map as they divided up the Middle East. Are we so far beyond that it's ancient history, or is there still an American part, a British part, a French part of this fractured Eastern Mediterranean?
It's actually a really good, way to look at it. The Sykes-Picot was, as you know, it was a line that was drawn literally in the sand by a Brit and a Frenchman, and they were basically dividing the mandates that France and as the Ottoman Empire fell apart. At the end of World War I, they, divided between the two countries, the two empires really, Britain and France at that time. They kind of carved up that part of the Middle East, and that's why the French ended up running Lebanon, and the Brits ended up running what's now Israel and the occupied territories. So all of that. It's a really important reminder that a lot of these boundaries, across Africa and the Middle East really were, designed by Europeans. And they tend to hold simply because the national leaders who run them now, are terrified of what would happen if everybody started to unpick them and to say, actually these borders have no legitimacy because you just have endless war. But that is actually part of the backdrop where you have organizations like Hamas, to lesser extent Hezbollah, but ISIS and so on, which are very much driven by the idea of restoring the caliphate and getting rid of these borders and restoring, the caliphate, of which the last was the Ottoman.
So, Mark, you're out with a column today, a Bloomberg opinion column, saying the Iran missile strike was another strategic error. Why do you say that?
Well, in essence, so if we go back to October the 7th, the reason I actually think that when the Iranians say that we didn't devise this, we didn't organize it, we didn't direct it, that this is true, is that while they're always happy to see Israel in a lot of trouble, they were not prepared for the kind of escalation that was likely afterwards, and which has actually happened. They are very afraid of getting into a war directly with Israel, knowing that close behind will be the U.S. They know that they are overmatched by Israel in terms of technology and military, and even more so by the U.S. So when they make these airstrikes, they're doing it because they feel they have to, because their deterrence, the escalation has kind of shredded their deterrence and their image of of strength around Israel. So they do it because they have to, but they are not very effective. They really do more to reveal how far behind they are, the Israelis, than they do to show, how powerful they are. And that has been quite damaging. And it's why they were reluctant to do this second round and kept talking about it and not doing it until the killing of Nasrallah.
We're with Mark Champion and continue with Mark Champion, Bloomberg Opinion, Queen Victoria Street, London. His expertise on the international affairs, the geopolitics and geoeconomics of the moment. Mark Champion, this came up at dinner last night. Let me have an expert reframe it right now. What is the relationship of the political leaders in Iran with their theological leaders, the theology that we've seen from 1979?
Well, that's an interesting question. I mean, in essence, they are the same. So, the supreme leader, Ali Khamenei, is the ultimate arbiter of political decisions. Any major geostrategic decision will be made by him. Any major political decision, including who gets to run for election or not to become the next president, is made by him. So the decision to, fire ballistic missiles at Israel was made by him. Beyond that, you do have a kind of a fairly complicated political regime where there is a sort of pro forma democracy which is there in order to create authority and legitimacy for the regime. So they get upset when people don't vote, for example. And you do have a presidency, you do have a government, which is, normally, not necessarily theocratic. The last, you had theocratic presidents like, Khatami and then Rouhani. But now you have someone who isn't. He's a doctor, a surgeon, and, you had Ahmadinejad who wasn't. So, it's a more kind of secular position, but it is always subservient to the idea of the revolution, and nobody gets to serve as president who actually challenges it.
Hey, Mark, I guess in terms of the next steps here, a lot of folks are speculating to what degree Israel will respond to the rocket attack, and I guess most specifically, will they target in any way the nuclear capabilities of Iran, which will take it up another level? What's your view there?
It's a really good question, and I don't know. There is a lot of temptation and pressure to finally do it. Israel has wanted to deal with Iran's nuclear program for a very long time. It's been trying to persuade the U.S. to get much tougher and to bomb it. And don't forget that Israel did bomb a nuclear facility in Iraq years ago. And so it is something that they are capable of doing, they would want to do. There's been hesitation because the Iranians have had so long to prepare, and they've been burying their most sensitive uranium enrichment plants under mountains, not just underground. They used to be underground. They've been burying them now under mountains. So, you need an awful lot of bunker busting bombs to get down there if you can. And it's one of the reasons why there's been a lot of hesitance to do it. If they try and go after the nuclear facilities, that will be, a huge escalation. And we're in a different scenario, different world.
Mark, very generous of your time today. I'm sure we'll speak to you in the coming days as well. Mark Champion at Queen Victoria Street in London. I'll look for his publications on Bloomberg Opinion, get that out to you on Twitter and LinkedIn as well. Paul Sweeney and Tom Keene, we need to regroup here. We have Mr. McCraw with our Stephanie Flanders and Lars Hendrik Roller at the Berlin Global Dialogue waiting to see if they speak on the immediate news events out of the Eastern Mediterranean. We're monitoring that in our control room. Also, we're looking at the markets opening. Paul, I'm going to say a fractional lift to the market. Certainly, oil does not give way to a lower price this morning.
It does not, Tom. I mean, just, the Brent crude, the global crude, up 3%, $2.22 per barrel. We're now at just under $76 per barrel, Tom, on the Brent crude. And just, again, a couple of days ago, that was, we were looking to break below 70 on a consistent basis. So a solid move higher here in crude.
And we see some yield higher as well. We should remember also, and again, we're monitoring this wonderful panel in Berlin to see if Mr. Macron speaks on Israel with all the commitment of France historically to the Middle East. We have a commitment to Friday at 8:30 a.m. At 8:30 a.m. We will be here. It's Jobs Day. Sweeney usually taking Fridays off all the way to Christmas, but Michael McKee joins us now. We heard from a guest this morning, Michael McKee, that this is arguably the clearest picture of the labor market before a lot of statistical noise into the end of the year. Does this jobs report have veracity?
Oh, it should have veracity. We trust the BLS to come up with the best numbers that they can, put it that way. But this one would be a relatively clean read because there hasn't been any kind of interruptions during the month of September that would cause it to be questioned in some way. Always seasonal questions. But the November number, as you mentioned, Tom, is definitely a candidate for being irrelevant, essentially, because of the port strike and the Boeing strike and the people who are going to be out of work in Florida, North Carolina. It is possible we come up with a negative print. I was talking about it this morning with some other people. Basically, you could have a report that is so bad that nobody pays attention to it. And this comes 4 days before the election because the unemployment rate won't be affected by any of those things. It's only the job count. And if we have unemployment doesn't move a lot in October and we see a negative print for jobs created, people will probably, the Fed will obviously, but people will probably say, well, this is just an anomaly and we can look through it.
So I guess the, one of the issues is the port strike, obviously. Any better analysis or any more updated analysis you're seeing coming out of Wall Street and global Wall Street about kind of the impact maybe on this economy?
Well, basically everybody's coming up with about the same numbers, somewhere between $3 and $7 billion a day in impact. I would imagine that we're on the low side right now. As this goes on, we'll get to the higher side as backups continue and the length of time that products sit offshore or in warehouses continues. It's probably not going to be something that the American consumer notices in the short run because companies brought in so much stuff ahead of time planning for this that for the next few weeks we'll have everything but as Lisa Abramowitz was complaining this morning, bananas.
Right.
But she said bananas are important, and they are. And so those are the kind of things, perishable food that some of it might be in short supply, but gasoline and oil are not handled by these port workers.
Where's the whisper number for Friday? Just vaguely.
Oh, well, I can actually give you a number on that. I'll look up the function WHISGO, W-H-I-S-GO, on Bloomberg, and the number is 139.
So way below
the survey
the
is 150. Yeah, but we don't have a lot of people who have put in their estimates yet because the folks on Wall Street are all who don't have to put out, as analysts do, their forecasts, are all waiting to see what happens. We got the ADP numbers today. We'll get some other numbers tomorrow, the ISM services numbers. So we'll have a much better feel for what Wall Street thinks when we get to Friday morning.
What's your biggest mystery now? If you could see McKee's desk, first of all, to the left, he has a shrine to the Boston Red Sox, and to the right, a shrine to the Denver Broncos, who I believe defeated the New York Jets soundly. Was it by 1 point?
By 1 point. Yeah.
By 1 point. And in the middle, he's got 47 research papers from the National Association for Business Economics. What's your biggest mystery right now?
I think the biggest mystery is how much does the economy slow? given all of the things swirling around. We just don't know. Obviously, this morning, there's been a lot of discussion of what happens with oil prices because of the Middle East. We have no idea. Javier Blasa, our brilliant oil columnist, suggesting that we're going to see prices go down significantly going forward. But this all depends on what happens there. And oil is important not just for inflation, but because it signals something about the industrial business.
China, I got 1 minute. We had is there follow-on anticipated in terms of monetary and fiscal announcements?
I don't think analysts are expecting a whole lot in the short run. It'll depend on how the economy reacts, not just in the short term for consumers, but do banks and others ramp up lending? Do communities, cities ramp up lending and business activity?
And now, folks, a conversation with Dr. Mike. I am so scarred from 1986 that I can't watch the wonderful New York Mets in the postseason. Do you feel the same way?
Yes. Paul Brennan, who produces the Bloomberg Business Week radio show, and I have been talking about that, and the fact that at some point you totally expect the Mets to be the Mets, and they haven't been the Mets so far. They keep coming back and winning, which is what happened in 1986.
And they're bring Havens in.
The good news is for you is that the Red Sox are not in it. That's not great news.
Well, it's my childhood.
But you don't have to make a choice here.
Before 1967.
You can root for the Mets. I'm feeling like I could root for the Mets without feeling disloyal this year.
Before 1967, there was no future into October. Michael McKee, thank you so much, leading our coverage towards Jobs Day. What do we need? We need a simple kind of life. Paul Sweeney into the next hour. Good morning.
Didn't work out. I'm covered in shame.